with all your stock related questions. But the next one that we have is on ITC. Our viewer has 40 shares of ITC at an average price of 305 and wants a view here also from a 2-year perspective. I don't think we have the name of the viewer, but Tapan, any view on ITC for the next 2 years?
Honestly, I'm not too much positive on ITC because much more dependent on the cigarette policy and all that, and we know that how the government is negative towards that segment. Again, the FMCG is one of the segment which is growing, but still it is not substantial. 80% profit is coming from cigarette. Again, we have to because the hotel was one of the segment which was suffering, but now as it demerger is happened, I think that is when ITC is a little bit vulnerable, because of cigarette. Again, the paper board demand is also weak comparatively. So looking at all this, it may give a normal return, but I think much more better FMCG stocks available where one can look at it.
Okay, and that's correct, right? Because FMCG is doing all the heavyweights for ITC as we've seen in Q4 as well, and plus FY27 is going to hamper the volumes because of the tax hike and price hikes that they're going to take. So that's something that one needs to know about ITC. Today, of course, the stock is seeing a downtick of 3%. But I think Murli is calling us from Hyderabad. Murli, a very good afternoon to you. What's your question about?
Yeah, good afternoon. I want to have a query on Aeroflex. Is it a good time to add on? I have about 20 shares at the average of 385. I had earlier, I booked profit and got out of it. Now again started adding at 350, 380 level. Is it good to add more at the current level?
I believe this is Aeroflex Industries that you're talking about, right?
Correct.
Okay.
Correct.
And you want a charts view on this one, if I'm not wrong?
Yeah. What is the short term 6 months to 1 year target for it?
Okay. Osho, Murli, I got your question. Osho, I'll take this up with you. Your view on Aeroflex Industries with regards to where charts go?
See, overall, the counter has seen a very strong and vertical rally from the zone of nearly 200 towards 450 kind of a zone. So at current levels, the technical parameters are extremely overstretched. So at current levels, the risk reward is not very much favorable, but still on the higher end, I'm expecting the zone of 445 to 50 to be seen as the first intermediate target on the higher end, while on the lower side, 350, 340 is a kind of a support zone for the counter. So at current levels, it will be advisable not to add more at current zone. If there will be a further breakout or another set of rally above the zone of 450, then one may look to add more positions in the counter. But till that time, I am expecting the counter can see some kind of tailwind or some correction towards the zone of 350. So 350 will be a comfortable zone to start accumulating. 450 will be the first target where one can look for some profit booking at those levels.
Okay, all right. So that's the view on Aeroflex Industries. The next one that we have is on Bharti Airtel. Murugappan from Chennai is holding 100 shares, bought at an average price of 1885. Says it has gone down from 2150 and he's not booked his profit certainly, and wants to know whether he should continue to hold this from a medium-term perspective or not. Slight losses, Osho, that he's sitting at. What should he do?
See, overall, the counter is very positive, very strong traction has been there in the counter. But in the short-term period, there has been some kind of consolidation around the zone of 1840, 1820 odd levels. So overall, from a short-term point of view, there might be further consolidation that can be seen in this counter. But from a medium-term point of view, one should stay invested. The chart structure is very positive. Tips towards the zone of 1820 should again augur well for the buyer. So one may look for even averaging out the counter around the zone of 1840 to 20. On the higher end, the first resistance and very crucial hurdle is 1940. Once it breaches the zone of 1940, then from there onwards, we can see 2100 zone again at very short-term point of view.
Okay, all right. I think we've got Ravi waiting by and calling us from Hyderabad. Ravi, a very good afternoon to you. What's your query about?
Yeah, very good afternoon. I have a query on Jammu and Kashmir Bank. Just want to know at what price is good time to enter, and I can hold for next 6 to 8 months.
6 to 8 months. Okay, got your question, Ravi. Then I'll take this up with Osho again. Osho, J&K Bank, what are the charts indicating?
See, overall, the counter is at very crucial hurdle zone. The zone of 145, 140 has been a kind of a strong correction zone in the year 2024, February month 2024. So at current levels, the counter is again retesting the same level. So one should wait for a decisive breakout. If there will be a decisive breakout and the counter breaches the zone of 145 on a sustainable manner, then only it will be advisable to accumulate the counter. and the target will be near about 40 odd points. So nearly 185 to 190 will be the medium to long term targets for the counter. But at current levels, it will be advisable to keep this counter in the radar list and wait for a confirmatory move above the zone of 145 to 150 kind of a zone.
Okay, all right. So that's the view on J&K Bank. The next one that we have is on Sterlite Tech. Our viewer, Mr. Gupta from Pune, is holding 200 shares at the levels of 160 and wants to know whether he can continue to hold this one or not. Tapan, Sterlite Tech has seen a good rally. In fact, recent CLSA note also indicated an outperform and gave the target price of 655 on this one. But from a long-term perspective, good hold.
Yeah, of course. No, if you see the rally from 88, it has gone over more than 500. So yes, great run. And first of all, congratulations to him now if he's holding this stock. Again, see the telecom capex overall slowdown will be there, but little bit impact will be there. But because of data centers and all that, demand will support. Again, the cost optimization is underway. Of course, there is even their export order from Europe, US, demand recovery is expected. And government broadband projects are also there, which is supportive. So I think overall, I know sentiments are much more positive, but here, the stock has already run up a lot. Again, the debt level is remaining high and one has to see the quarterly results also. So for me, keep a stop loss, hold on to the stock, but buying at this level is no, but yes, keep a stop loss at least 15-20% down and go on with the rally.
Okay, all right. The next one is, I think we've got a caller waiting by. Subramaniam is calling us from Bengaluru. A very good afternoon to you. Go ahead, ask your question. Hi, Subramaniam, can you hear me? Okay, I think we have lost his connection, but I think we do have his question. So he's bought HDB Financial 20 shares at the levels of 740. Sitting on a current loss for around 1300 rupees, but wants to know whether he can continue to hold or not. Tapan, I'll stick with you for this one. Your view?
Still, the valuation is on a higher side. Of course, now during the IPO, it was much more higher. It has come down, but still, the growth should be at least 30% and above. Again, the net interest margin improvement should be there, but which is not happening currently. See, consumer finance demand is improving. AUM growth is expected in the double digit. The only thing is GNPA is almost 2.44%, which is a little bit elevated, and unsecured lending stress is also there. So at the current valuation, of course, ROE is improving. I think it is on a higher side. So wait for a little bit more correction, then only get into it. If he is holding the stock, please hold it, but don't add more.
The next one that we have is on Jyotish CNC. Subhajit Roy from Kolkata has purchased 300 shares of Jyoti CNC at the levels of 769. He's saying that right from 3 weeks, it's consistently low, and today it's hit a 1-year low. Should I hold or exit? Osho, do you think it's found its bottom?
See, technically, the counter has been into a secular downtrend. There has been formation of lower lows, lower highs. So having a confirmation that the bottom has been made is decisively no. It might plunge further because there has been no respite in the correction zone. So better to exit from the counter. There has been no respite. It is having a very strong rejection around the short-term moving average. So at current levels, it is advisable to exit the counter. The counter has been not performing well, and even there has been a major breakdown around the zone of 750. So better to avoid this counter for me.
Okay, all right. The next one that we have is on HLE Glass Coat. Our viewer, Shweta Kohli, wants to know if this is the right time to enter this counter or not. Osho, your view?
For HLE, I suggest that this counter has been into a corrective phase. The counter has seen a decisive correction from the zone of 640 and has been half from those levels. And again, it is facing very strong rejection from the short-term moving average. But in the recent 2 to 3 weeks, there has been a respite or a pullback, technical pullback from the lower zone. So one can stay invested in the counter with a strict stop loss of 285. Strict stop loss, if it plunges below 285, better to exit position. There might be a technical pullback towards the zone of 380 followed by 410 kind of a zone. So one should again need to review if the counter reverses from here onwards and move towards 410, then whether one should stay invested or exit at those positions. But as of now, put a strict stop loss of 285 and hold the position.
Okay, all right. The next one is on PCBL. Our viewer, Barkha Gupta, has bought at the levels of 458 and 3,600 is the quantity that she's been holding. What should she do next from a slightly long-term perspective, Tapan?
Well, this time now you can see the recovery is coming again. The specialty segment growth is accelerating for PCBL. EV tire demand supports the outlook, and again the capacity expansion is there for next 2 years. The margin improvement is gradually expected, and management is quite saying that they are going to do it. So realization only is the point where the declining stages, and margin overall hopefully they are going to recover. So my view is that because the stock has fallen a lot and the valuation looks okay to me compared to what type of performance it has done in the past, so one can hold on the stock, don't add more, but yes, hold at this level.
I think we've got Tyagarajan who's calling us from Vietnam. Tyagarajan, a very good afternoon to you. How can we help you?
Yeah, good afternoon, ma'am. This is Tyagarajan from Vietnam. I'm holding 300 shares of Apar Industries. I bought it at 10,280. I am willing to hold long term about 12 months. What will be the safe target one can expect if I can continue to hold on?
Okay, first of all, Tyagarajan, heartiest congratulations because you're sitting on profits of over 7 lakh rupees and you've spotted it at the right price and sitting on great gains. So I think I'll take up Osho's view on this one. Osho, do you think there's further upside here from the 13,300 levels, or should he book his profits?
So again, firstly, many congratulations. The counter have seen very strong outperformance currently around the zone of 1300, 400 odd levels. But I'm expecting that in the recent period, there has been a breakout and that has followed a vertical rally. So some cool off can be seen in the counter, but again, on the higher end, till the time it is sustaining the zone of 12,000, there is no concern in the counter. So better to hold this counter with 12,000 as a stop loss from medium to long term point of view. And looking at the momentum and breakout that this counter have seen on the weekly time frame chart, the higher target comes around the zone of 16,000 odd level. So one should definitely stay invested in the counter. 12,000 will be the advisable stop loss, and 16,000 will be the first target that one can expect from a short to medium term perspective.
Okay, all right. So it's time for our rapid fire round. Osho as well as Tapan, try to keep your answers as short as possible. The first one is on Praj Industries. Our viewer wants to know the short-term target and stop loss for this one. He's holding it at the level of 318. Osho, your view on the charts?
For 318, it will be advisable to keep a strict stop loss of 370, 372 odd levels. On the higher end, 400 is the first target. If it breaches, then 425.
Okay, one more question your way, Osho. Mazagon Dock bought at the levels of 2530. 150 shares is what Ankit from Gurugram has been holding. Continue to hold from a 3 months perspective?
From a medium-term point of view, yes, one should stay invested. I'm expecting that any breakthrough above the zone of 2550 can provide a strong momentum from medium-term perspective.
Okay, the next one is on DCM Shriram. From a long-term perspective, is this the right time to enter, Tapan?
Yeah, you can enter, but maybe 5-10% below. Overall, for long term, it's a good stock to hold.
Okay, Tanla Platforms is the other one. Srinivas from Hyderabad has bought at the levels of 934. 300 shares is what he's been holding. Continue to hold from a long-term perspective or exit, Tapan?
Well, he can average a little bit, but wait for some time, hopefully recover.
Okay, the next one is from Vicky. He's holding HDFC 500 shares at the levels of 910. He wants to know whether he can hold or exit. Tapan, Osho on the charts.
On the charts, it is still looking weak, but from a medium to long-term perspective, one should stay invested. 720 is a very strong support zone for the counter.
Okay, the next one is on Auto Anks. Precision Engineering, Sansera Engineering, Sona BLW. Which one is a better bet for the next 3 to 4 years, Tapan?
I think precision engineering is a better option.
Okay, the next one is from Mr. Murli Mohan, who's writing us from Bengaluru. He's got 50 shares of Siemens at the levels of 3245. What's the outlook for next few months is what he's asking. Osho?
A very strong technical patterns. I'm expecting that the zone of 4150, 4200 can be retested. So stay invested in the counter.
Okay, the next one is on Chennai Petrochem. 100 shares is what Ramananda has been holding. Wants to know from a long-term perspective, can he continue to hold or sell at this price? Tapan?
Hold it, but you have to review quarterly and the oil prices. So currently it is hold.
Okay, last one on KC International. What's the technical view looking like right now, Osho, on the charts?
For KC, it is looking quite weak as of now. It is having a very strong resistance around the zone of 545. If it breaches above that, then only one should look for buying opportunity.
All right, that brings us to the end of this rapid fire round as well as Ask Profit. Tapan as well as Osho, thank you so much for taking out the time and helping us solve all those stock-related questions. The viewers, completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim.
Welcome, you're watching India Market Close. You know, if you had missed the last 3 hours of trade and come right back, nothing would have really moved. The market is almost like, have you seen those shows, Alex, where from one episode to the other, nothing moves, and you can come back after a whole season and the storyline is exactly there?
So anybody who's watched Japanese anime knows exactly what you're talking about.
Okay, I think Hindi serials as well. But yeah, that's pretty much how one way of describing what's happening in the markets. Pull up the intraday of the Nifty. and I know this is your favorite term, nothing burger.
It's a nothing burger.
Yeah. So I think we have a bit of an overlap here, but if you look at the intraday of the Nifty, nothing much happening. What's maybe a bit of a relief is that your advanced decline ratios at least are not too negative, and you've just been in that very mild range. Do you think we can get the Nifty heat map? That would give us a sense of what's working, if at all. And more, the conversation in the markets is that Nifty mein to story hai hi nahi. That's not what's exciting at all, more than anything else. And I think one of the reasons is because of the composition of that index.
Yeah, absolutely. There are a few big movers though today. Hindalco in the metal pack is doing particularly well. You'll see Tata Steel as well in the top ranks. And a few of those automotive companies, Tamanna, continue to do well. I was looking at the track record of the last few sessions and it's 7 days in a row.
Yeah.
Okay, there are a few sessions where it's just been piecemeal moves, but 7 days of gains for the auto index as a whole, and it's a good reason because you're seeing quite a bit of positivity in the numbers that have come through on Vahan as well.
You know, what's also happening is that a couple of things in auto data. Puneet did a very nice piece today about how Vahan data is showing record buys. You have commentary which is very positive, and good results are really seeing that impact. Hindalco clear winner today, as is Eternal. ONGC on the back of numbers suffering. ITC is ex-dividend, that's why you're seeing that number there. HDFC Bank in that range after that Indian Express piece raising questions about some payments that have been made by the bank to MSRTC. They're saying there's no wrongdoing at all. They've issued a denial, but that stock seeing a bit of pressure over there as well. I want to look at the broader markets if we can, and what's happening with the mid cap and the small cap right now. We'll also pull up Brent at the end of this presentation because that's one lead indicator to watch. Again, in a range, but has stayed positive. Small cap would possibly be doing even better, and that's exactly what's happening, about 0.5% up. So it's the broader markets, that's the story. Should we quickly look at the sectoral indices?
We should, but and perhaps we'll see it in that. But if you can you pull up the Nifty Next 50? After you do this, okay, so is the Nifty Next 50 there? Yeah, you see it on the top. So these are also large caps. There's actually a pocket of strength in the large cap. So while the benchmark Nifty 50 is just flat and the broader markets are also just about 1/3 or 1/4 of a percent higher, the Nifty Next 50, a whole pocket of stocks that are doing particularly well. And I think there are a lot of stories, Tamanna, in individual stocks that are causing 7, 8, 10% gains even for a few of them, and some of those stocks that are losing quite a considerable amount of ground.
One of them is Cummins India. I want to pull up the intraday of Cummins India, and if we can get those lines also right over here. But good set of numbers have come in on Cummins, and a huge spike over there. And look at this result we're talking about right now. Sri Chakra, also a small cap over there, 15% up because of that spike. So you're really seeing that kind of an action move up. Good jumps in top line and bottom line, solid performance, and then the street is excited. So next 50 is where the action is.
It is, and a few more stocks, right? You have, for example, Pine Labs. I was just looking at the screen and seeing what stocks are moving. It had earnings earlier in the week, but the move is today 5% or thereabouts. Exide is doing
very
well.
Positive brokerage notes on Pine Labs. That could be one of the reasons. And you're right, Exide and Amaraja as well.
Both doing particularly well. And Z Entertainment, on the back of a pretty interesting announcement, the foray into sports again, and it's apparently vying for the FIFA World Cup. It's surprising. We're just weeks away from that tournament, and those rights aren't out yet. They haven't been clinched yet.
Oh, wow. So this is going to be exciting. 11.5%. That's why you're seeing that media index up. So here's what's been happening in the markets. If I had to put it all together for you, it's range-bound trade. Nifty is consolidating around 23,900. HDFC Bank and ITC are pulling the index down by over 80 points. So if you didn't have these two in a funk, you'd probably see a much better action point on the Nifty. Metals and autos are shining in trade. Aluminum names are buzzing on higher prices as well. That's why that pop in Hindalco. For the Nifty, the 24,000 strike is now the ultimate battleground. Closing above 24,050 could move markets towards 24,160 and 24,250. Avoid aggressive longs in the Nifty if it breaks and sustains below 23,900. And on the Bank Nifty, there's a buy on dip strategy you can look at that's highly favored near the 54,700 to 54,850 mark. For the Bank Nifty, a breakout above 55,550 opens doors for a fast move towards 55,800 and 56,000. Supports at 54,800 and 54,700. Resistance at 55,400, 55,500 and 55,800. Let me go across to Samir Dalal, who's joining us. He's from Natwar Lal and Sons Stockbrokers. We'll get Nilesh Jain in just a bit to get us a technical view as well. But Samir, I want to start off with you and ask you what you're making of the zoom in autos right now. And the debate that we've been having in our studios and in our newsroom since this morning is that autos are looking good now. But what about when the chickens come to roost from what's happening in West Asia crisis, fuel prices going up, some hit on consumption perhaps? Is that something that the market will start pricing in sooner rather than later?
Good afternoon, and once again, thank you for having me on the show. Yes, I think your question is very apt. And should we be a little concerned about what's happening and what the impacts of that are going to be for the auto sector? Absolutely. Look, we've had the numbers, the way I've been hearing and reading about it, have been really good for the month of May, because of which, you're seeing a rally in a lot of the auto counters. But they're obviously going to be a bit of a dent once you see the full impact of the fuel price hikes coming through, possibly interest rate hike over the next one or two meetings. Quite possible, given the fact that inflation will start seeing an uptake. So given that auto sector could face a bit of turbulence, and that then you could see a correction, but I look at it from a longer term perspective. So if you do get these corrections, which we believe will happen, they actually throw out an interesting opportunity to look at companies from a longer term investment perspective. So can they correct? Yes, they can. Would I be a buyer in some of them? Absolutely, I would. So the ones I would look at would be Tata Motors, PV. It's already rallied quite a bit over the last month, ever since the result came out. But any correction closer to 360, I'd even be buying it now, but closer to 360 would be the ideal opportunity. Hyundai is one of the stocks that has seen a massive correction because of them losing out on the growth and market share. So that is something we believe they will be able to capture back with some new launches, with exports picking up over a period of time. So we think that is an interesting play. Maruti at this point, valuations are a bit stretched, so we'll avoid. And in the two-wheeler space, our top pick remains Hero Motocorp. For the simple reason that we believe that the two-wheeler sales will continue to grow. There will be more traction to electric two-wheelers, and they have their direct play in that. Plus, they have a large investment in Ather Energy, which gives them access, which 30% in that. So as Ather's sales keep growing and the value keeps growing for that, I think Hero will stand to benefit from that. So that becomes our top play in the space there.
You're showcasing your vintage by calling it Hero Honda, because people from a certain generation remember fill it, shut it, forget it, and Hero Honda, right? So it's been Hero Motocorp for quite a while. Nilesh Jain joining us as well. Nilesh, Head AVP Technical and Derivatives Research at Centrum Broking. Good afternoon to the both of you, and good afternoon to you, Nilesh. What are you looking at with regard to the benchmark Nifty 50? Because we've been chop and churn all through the session today. What are the indications that you're picking up, and also for the Bank Nifty?
Very good afternoon, Alex. Good afternoon, everyone. Well, absolutely. This has been the second, in fact, third consecutive session where we have seen some bit of resistance that Nifty is facing about 24,000. So it is finding difficult to sustain about 24,000 mark. Now, today's, candle, it looks like sort of a dragonfly, in fact, gravestone doji kind of candle we can see on the chart. It is making an attempt to test this 21-day moving average that is placed at 23,860. So just in case if it closes below the same, then we may see further downtick to continue. But interestingly, we saw on 25th of May, in fact, at the beginning of this week, there was a gap up opening. Now, Nifty is making an attempt to fill that particular gap. But if you see the volatility index in the weeks, which has already cooled off more than 14% this week, in last 3 consecutive sessions. So that is something that is giving more comfort now. So I think this dip should be used as a buying opportunity. If at all you get any levels near about 23,800, that can be a good entry point, keeping a stop loss below 23,650. That's the 50-day moving average support. And keeping that as a stop loss, I think buy and decline should be the strategy in this current market. we may see a gradual uptick towards 24,000 to 24,200 going forward. Coming to the Bank Nifty, no doubt it has been under pressure in last couple of trading session due to the selling pressure. Specifically today, we have seen in the HDFC Bank. So given this kind of a structure, there could be possibility that we may see a follow-up on the lower side towards 54,600 to 54,500. Important support is placed at 54,500. In case if it breaks below the same, that will be considered as a failure of the breakout that we have seen recently. So keep an eye on 54,500 level. That's the very important support.
What about picks, Nilesh?
Well, I have a couple of buy recommendation. Number one, that's the KEI. So KEI, in fact, if you see wires and cable space has been doing good, be it Polycab, RR Cable, now KEI, this particular space is buzzing. And a very good setup can be seen in KEI. We expect momentum to continue on the upside towards 5,550 to 5,600 in the near term. And one can keep a stop loss at 5,340. So that should be the stop loss. Another pick that's again on the long side, that's within auto space. So two-wheeler space is looking attractive now. Bajaj Auto will be my preferred bet. Given the kind of a setup we are witnessing today, it has given a good breakout as well. Good build up on the long side, more than 2.5% Y addition can be seen. So go long in Bajaj Auto, keeping a stop loss below 10,550. Immediate target would be 11,100, followed by 11,500 in the near term.
Got it. All right. Let's get your first cut on the earnings of Cummins. We marked it for you just a short while back, and the stock spiking on the back of what looks to be a very good set of numbers, still holding at 8.5% higher. Somit here to tell you about what he's picking up in the first cut. Somit?
Well, if you look at the stock, it has moved nearly 6% after the company has reported its numbers. A stellar growth of 20% plus on all front, revenue, EBITDA and net profit. But what is more important here is that it's a beat of 10% compared to what the street was anticipating. Now, if you look at the EBITDA number, street was anticipating the EBITDA to be close to 578 crore rupees, but the company has reported an EBITDA of 641, a clear 11% beat. Margins have beaten the analyst estimates by around 50 to 60 odd basis points. So clear beat coming in on all fronts for Cummins. Now, if you look at the net profit number, that is higher than the EBITDA number, and this is largely because there is some one-off here of around 30 odd crore rupees owing to the labor code charges that they had accounted for earlier. They have reversed it right now, and hence you can see the net profit number higher. But again, even if you remove that, it's a clear beat compared to what the street was anticipating. But do remember that the order book number is yet to come out, so we need to still watch out for what is the order book and management commentary on how they are looking at things for FY27, because commodity prices have increased, so their raw material costs must have also increased. So that is something that we still need to watch out for. But on the number front, it's a clear beat, and that is what has led to this 9% move in the share prices of Cummins today.
Yep, you're seeing this spark on Cummins, but that caveat that Somit has talked about is important. Order book details are awaited. But let's now talk about stock of the day. In a sense, has to be Hindalco, because of everything that we've been seeing with aluminum prices. Joined now by Sharad Dubey for more. But before that, should we talk about Techno Electric?
Exactly. And for the last 2 days, Tamanna and Alex, the stock has been in a free fall. A little bit of concern coming in for the investors. But let me decode the reasons for it, why this is happening, why the sell-off is happening for Techno Electric. And of course, the volumes is also picking up in terms of selling. And let's put out the reasons also. First and foremost is the Middle East disruptions. That's where the concern is there. Just a half an hour ago, the con call was also over. The supply chain issues is something which is there, and the street is not liking it. And this is expected to sustain going ahead in the first half also as well. Higher raw material costs further, and that's where the impact is coming in. And the revenue recognition which is there, a large project which was there, I just checked the accounts, notes to accounts, and that's where a large deferral has happened for this, especially from the Middle East, is what the channel checks are suggesting. Execution risk is likely to come in H1, and that is why that sell-off has intensified. It's down almost 11% right now. The stock, and looking at the stock itself, last 5 days the stock is down 16%. Last 1 year also the stock is in the red, but it has been a multi-bagger for the last 5 years, giving returns of almost more than 3.5 times. But let's look at the long-term story. Is it intact or not? A strong demand coming from the power segment. We have seen it all across happening right now. Apart from that, if you get into more detail, strong queries for the data center and the AI theme, and also if you look at it, the large renewable segment and the HVDC segment, that is where the bullishness is also coming in. Apart from this, the order book that stands at roughly 9,600 crore rupees. And if you get into more details about it, the 7,000 crore comes from the transmission segment, and also minor awards coming in, especially around 400 crores of award post March. Of course, this number is lesser than what the street was estimating. And 15 to 20 megawatt of live capacity is expected to come in by December 27. And the capex plan is around 1,000 odd crore rupees planned for the next 1 to 2 years. So these are the important key guidances which we are talking about. But of course, the street is concerned, especially on the smart meter business, because that's where the execution risk is coming, the payable issues is coming from the government, and that's a little bit of concern coming in. So this is the entire picture for Techno Electric, why the stock has tanked by more than 15% in the last 2 trading sessions.
Yeah, it's quite the comprehensive look at the stock. Samir, if you've got an opinion on this, what would you do if you're holding the stock? Obviously, you've seen quite a bit of a slide in erosion in your capital. What's your view on Techno Electric?
Yeah, so, I wouldn't worry about the short term. And yes, there have been certain issues which were flagged up when it comes to execution of certain orders and also the cost of raw materials, which are probably a little bit higher. But if you look at the long-term growth trajectory of this company, it still remains very, very strong. We've been saying on your channel for quite some time that the entire energy space is a space that is going to see huge capex in India over the next maybe 5 to 7 years. For the transmission lines coming up. We think Techno Electric is one of the companies that will also be getting its fair share of orders. KEC International will be the other. There are multiple of them, which will do that. So for me, these corrections, consolidations are important to happen. The stock had run up far too much over the last period, because of which valuations have moved up. So now with this consolidation, what you're basically seeing is that the valuation multiples are consolidating and it's allowing earnings to catch up. We do believe that 1 or 2 quarters could continue to be subdued. So in the near term, the stock will be sideways. But over the longer term, we remain very constructive and positive. We think the stock will move up. So dips like this are buying opportunities, and one should add on to these stocks over the next, say, 3 months to 6 months. And I think there will be great returns to be made over a period of time.
Just while we're on the subject, and because such sharp cracks have been seen in the stock, Nilesh, on the charts, what according to you is a good level to consider going long, particularly on the back of what Samir has just described on the fundamentals?
Well, Alex, that level would be somewhere around 23,800. So still around 70 to 80 point fall can be seen from the current level. We did see a gap up opening on Monday. So that gap area is getting filled. So there's still some more room left around 30 to 40 point to fill that particular gap. But ideally, a good entry point could be somewhere around 23,800. Then the stop loss will be coming around 20,000.
Nilesh, are we talking about the same stock? Because Techno Electric is trading at what? Can we pull the chart up, please? Just above 1,000, 1,077. So are we talking about the same stock?
Well, Alex, sorry, I was talking about Nifty index. But anyways, Techno Electric, big crack we have seen today. It's a kind of structural breakdown. Reason being, counter has broken below is 200 DMA, 50 DMA, and also 100 DMA. So all these 3 moving average has been taken off decisively in today's trading session. And if you see volume spurt, that is also higher than the average volume that we have seen in the recent time. So given this kind of crack, I believe there will be another leg on the lower side. A follow-up move can be seen, and counter may test the levels of 1,000 to 960. So it's an avoid taking any contract at current level. It's a kind of sell-on-rise structure, and till time it doesn't take out 1,200 level on the upside, ideally one should avoid taking any contract.
Okay, before we go to anything else, just pull up the Brent July futures if you can. We're at 96.27, 3.5% down. Now, here's what's happened, because in case you're wondering, and this becomes a very important hour to track what's happening on the West Asia war front as well. Iran has put out a statement saying they do not think the war will escalate. They obviously go on to say after that, but if it does, the whole coastline will turn into a graveyard, etc., etc. But the key part of the statement, at least what the street is reading, is where they see it unlikely as the war escalating, which is why you're seeing that cool off in Brent prices right now adds more to the pressure that ONGC is facing, I suppose. But if you just pull in your HPCL, BPCL, IOC, I just want to quickly see what some of your OMCs are doing. ONGC is suffering anyway because of its results and more. But look at the kind of climb up you're seeing on some of these oil marketing companies right now, all of them in the green as a result of this. Meanwhile, let's talk a bit about Hindalco. It's one of the top, or it is actually the top Nifty gainer in trade today. Parth is joining in to tell us what is causing that sharp rally, Parth.
Right, so this rally in Hindalco is driven by a sharp increase in aluminium prices. They have actually reached a 4-year high due to the Middle East tensions that are going on right now. So first, understand why are these aluminium prices rising. So there are two main reasons behind this. The first one is what everyone knows, the Iran conflict that is going on. It is disrupting the global supply of aluminium, and the risk of blockade of Strait of Hormuz will tighten supply even more if it happens. And the second reason is the China factor coming in, which is the largest producer of aluminium worldwide. They're already running their smelters at full capacity, and now with the Chinese government scrutiny tightening up even more on their energy use and emissions front, the aluminium supply could tighten even more globally. So these are the two reasons why aluminium supply is in pressure currently. Now let's see how this aluminium supply will impact Hindalco. So the higher aluminium prices directly improve the company's profitability. The stronger revenues and the improved performance which Hindalco already reported in Q4 is already supporting their sentiment, their current market sentiment. And lastly, Morgan Stanley has an overweight rating on the company with a price target of 1325, which implies an upside of almost 20%. This is mainly due to the higher global aluminium prices supporting their earnings going forward. And not just that, they expect the Hindalco's India business to deliver strong growth while Novelis continues to improve its capacity, ramping up after the disruptions that we saw due to the Oswego fires in the last and the quarter before that. This is the main reason why Hindalco is rallying today. In fact, in the last 2 months, the price is almost up 30% in trade.
Got it. All right. Thanks so much for that. But by the way, Nalco doing incredibly well as well. In fact, if anything, doing better than Hindalco. There you go. Both those stocks up and about because the underlying aluminium prices are in focus. Let's take a quick check from Nilesh Jain on not just these two counters, but the metal pack as a whole. It's been doing particularly well in the recent past. What is your specific call on some of these counters, Nilesh?
Well, Alex, we remain constructive on the Nifty metal space as a whole. Today as well, we have seen a fresh record high that Nifty metal index has hit about 13,700 mark. So overall, we expect this momentum to continue, specifically within aluminum space, as you rightly pointed out. Both Nalco and Hindalco are looking strong on the chart. Nalco, we expect a further uptick to continue towards 445 to 450 in the short run, and keeping a stop loss below 425. Nalco is a buy. Yes, Hindalco will be our second preferred bet within this particular space, and we expect further uptick to continue. And on the upside, we may see the levels to continue. Another 5 to 10% kind of move can be seen in Hindalco as well. As far as levels are concerned, 1200 plus kind of levels we are expecting in Hindalco. So stop loss should be placed at 1120.
Okay. 1120 is a stop loss for Hindalco. Let's get to that segment this afternoon where we get you all of the khabar. Sumit Sarkar joining in with chatter from the dealing room. Sumit, what's on your agenda?
Well, firstly, it's APL Apollo. Now, there are some sell flows on institutional desk in trade today. Delivery volumes are expected to be on the higher side for this counter, so keep an eye out for APL Apollo. For Bharti Airtel, dealers are indicating that a large long-only FII is buyer in trade. The stock was up, but right now it's largely flat. But a large long-only FII is a buyer in trade is what dealers have highlighted. For Pine Labs, there was a big block deal that happened in trade today, and dealers are indicating that a private equity was a seller here, and multiple mutual funds and a prominent family office was among the buyers when it comes to Pine Labs. For HBL Power, multiple dealing rooms are recommending buy calls to their clients. Dealers are expecting a large order win announcement very soon when it comes to HBL Power. And lastly, for Amber, there are buy flows on the large HNI desk and PMS desk. Dealers are expecting a positive news flow in this counter very soon. And as you were speaking about Hindalco and Nalco, yesterday it was part of our segment where we did indicate that there are buy flows on institutional desk and some capacity curbs in China are expected to push aluminum prices higher. And today aluminum prices are at a 4-year high and both the stocks are up around 4% in trade.
Got it. Thanks so much, Somit, for that. So quite a few khabars and khabar confirms as well. By the way, let's focus in on Zee Entertainment because that stock is absolutely buzzing, perhaps single-handedly pulling the media index higher, double-digit gains today. And you know what this is about, right? It's the launch of 4 new channels and the re-entry into the sports segment for Zee Entertainment. Remember, all of this is happening ahead of the start of the FIFA World Cup. And we're just days away from that moment, and we haven't yet seen the rights in India being given out. So that's certainly something to watch out for. It is launching its presence through Unite 8 sports channels, 4 dedicated sports channels to build what they want as a robust linear sports bouquet. Unite 8 Sports is set to offer key events across football, kabaddi, cricket, as well as badminton, wrestling, boxing, and combat sports, among others. So the whole bouquet is what they want to offer. Maybe it could start with the FIFA World Cup, which is why there's interest in the stock. Samir Dalal, Zee Entertainment has had quite a few issues to contend with, but this could well be a shot in the arm. What do you think?
Yeah, so I think we are jumping the gun too quickly. Let the news get announced that they are actually the ones who will get the rights for the FIFA World Cup. Then how they turn profitable over that period, because this is not going to come cheap. It's going to come at a price, right? And eventually, at the end of the day, look, they've not been able to do very well with advertisement rights over the recent past. Their profitability has come under pressure. Their TRPs have not been that great. So looking at all of those factors, we want to actually see these things come in. So the only plus side or the only advantage you have is that, look, you're getting rock bottom prices. Really, given the kind of content that they own, given the channel bouquets that they have, they should be able to do better. So hopefully, if things improve, yes, the stock can go up, but till this news comes, till we see that in the numbers, it becomes very difficult from a fundamental point of view to recommend a buy.
Yeah, okay. Stay on with us. We're putting the focus on Indegene. Their Q4 performance was broadly in line with expectations with strong revenue growth. Overall the numbers were good, but margins did remain under pressure due to continued investments and a one-off legal provision. However, the company's business momentum remains intact. Gen AI is a big driver as well. But to talk about all of that and more, we have the company's CFO, Suhas Prabhu, in our studios. Suhas, a very warm welcome to you and great to have you here in the NDTV Profit studios.
Thank you. Pleasure to be here as well.
Okay. Since we're talking about the numbers first, like we said, most of the metrics look great. Revenue up 33%, EBITDA up about 11%. This is year-on-year figure that we're looking at. What was that?
Yes. With the opportunity that the market is, that we are seeing in the market with this Gen AI-led changes, we are investing both on the business side as well as the go-to-market side, and we believe that the growth in the coming quarters would get reflected coming out of these.
Yeah, but how much? How much? What is the quantum of investment, the nature of investment?
The quantum of investments was about $6 million from an annualized perspective, which is an impact of about 1.5% on the margin.
Interesting.
Sorry, so just one point on the Gen AI bit, and just wanted to connect it to something which was been reported now. Uber, for example, has come out today, and you would have read that story, saying that we are pulling back on our AI investments because we are seeing no link between, or not enough of a link between AI and efficiency that we thought would happen. And one would argue that some of these companies are ahead of the curve compared to India. Just, your thoughts on that. Is there a sure shot connection you as CFO are able to draw at this point that this is the investment we'll make in AI? Yes, we'll take a hit of 1.5% on our margins for now, but this is exactly what it's going to yield.
Well, that is the intent, and things are evolving, right? It is important, as you said, keep a tab on the things as they are evolving, right? And arrive at the right balance between what is the cost of innovation versus the impact and the speed of innovation. And it will be a constant endeavor to keep a balance between all these three vectors so that we also do not have surprises on the investment and therefore the margin front.
When do you see that panning out, though, those investments?
And the investments that we have specifically made, the 1.5% impact on our margins, we're looking at a payback over a 6-quarter period, and 2 quarters are already up. So I would say over the next 3 to 4 quarters.
Speaking of your business mix, it's been pointed out, and we've got a research analyst that tracks this very closely, and what they were pointing out was that the enterprise commercial is growing significantly faster than your other businesses, creating a shift in the mix as a whole. What is the thinking behind this, and what are the implications for margins? What is the implications for top line growth as well?
Yes, a good observation. Enterprise commercial is growing at a faster tick related to enterprise medical or other segment. One of the factors is the inorganic growth. Biopharm is entirely part of our enterprise commercial business. The other dynamic that is playing out in the market is that there is more momentum that we are seeing from an immediacy or the currency perspective in the enterprise commercial, with customers taking faster decisions, with they launching more and more products in the market, and therefore a little bit more momentum. But I would say that's a very near-term shift. Over a 2 to 3 year period, I would say it would play out equally on both the segments.
Is there a learning that you're seeing on the size of the deals that you're getting here? Because the interpretation in certain other segments where you're talking about adoption of generative AI is that the volume of deals that you can take up would be significantly higher, but the size of the deals would be relatively smaller. Is that something that is visible here as well?
Well, I would also argue the other way around. We are moving away from the experimentation phase to the actual deployment and the outcome phase. And therefore, experiments by nature tend to be of a smaller size, versus implementation and deployment would be a larger scale. So we are seeing that shift. We announced the number of $1 million plus deals, and even a $10 million plus deal in the last quarter, in our Q3 earnings call. So many of these are having Gen AI embedded in them. So we are also seeing a shift from experimentation to real life deployment, actually increasing the size of these deals.
Just a quick follow up on that. What is the kind of concentration that you have in terms of clients that you're getting in these large deals?
Yeah, so our focus is the life sciences segment, the innovator segment, which means that our top 20 global pharma are about 60% plus of the market, and our concentration would also be similar. Our top 10 clients, which are largely the global innovator pharma, would constitute 51% of our revenues and so on. Even on the new business that we are winning, we are seeing equal traction. Of course, we see speed being higher with the smaller companies in this sector, but then the scale obviously comes from the larger customers.
What about biotech? How big a portion is that panning out to be for you?
Well, biotech has been traditionally a very small segment of our business, under 3%, and that actually reduced to under 2% over the last couple of years. But with the increased funding to this segment and improved prospects of this segment, we are seeing momentum back in this industry. We have won business from 2 customers north of $5 million each during the last fiscal year, and the percentage has crept back up towards 3%. And we remain bullish because a lot of innovation is actually coming out of the emerging biotech, as we
no doubt.
say.
So what is the breakup like right now between enterprise medical solutions, enterprise clinical solutions, omni-channel? How is it all broken up? up in terms of your revenue contributions?
Yes, so enterprise commercial is the largest segment. We have collapsed omni-channel into enterprise commercial over the last year, and that is north of 70%.
Okay.
And enterprise medical is about 25-26%, followed by enterprise clinical and consulting, which is the balance 4%.
And that's the mix that you see continuing?
We see this to be largely in line with enterprise commercial being north of 65% even as we go ahead, followed by medical in that 25% range, and clinical and consulting on the small base will grow at a faster pace, but
I'm talking about revenue contribution, not in growth. Yeah.
I do want to check, Suhas, on how you're seeing FY27, because ultimately, if there's one sector that globally is being looked at as something that is not really affected by various other issues, is the pharmaceutical sector and the healthcare sector. And so from that perspective, there's good news for you.
Yes.
How does FY27 look? What is the kind of growth that will keep you and the rest of the management happy?
Yes, so there are no headwinds in terms of geopolitical or any other US policy matters. The industry is seeing significant momentum in new launches and looking forward to growth. And that gives us the confidence that FY27 would be better than FY26, both organically and inorganically. And we would strive to be north of 20% from a growth perspective, even in the current fiscal year.
Top line and bottom line?
Both. And I would say more accelerated on the bottom line, because as we said, some of the investments that we have made will be ideally playing out during the year.
Okay, as early as FY27.
Yes, and more importantly, from a margin in H2 of this year, more pronounced, but the growth should be fairly visible through the fiscal year quarter on quarter.
Okay, thank you so much, Suhas, for coming in and speaking with us, answering
pleasure.
all of
Thanks
our questions. That's the CFO of Indegene, who was talking about his company. Let's just track what's happening very quickly across the board. Samir Dalal of Natvarlal & Sons Stockbroking still with us. Samir, just wanted to get your take on the pharma and the biotech pack. Of course, we were speaking specifically about Indegene. I don't know if you track that company, but on the pharma side, what are you liking right now?
Yeah, so I unfortunately don't track Indegene, so I can't comment on that. But having said that, on the pharma space, we remain very constructive. What you rightfully said, what you were discussing with the management was that, look, there are no hurdles that are coming up in the space for pharma companies, at least that are visible to us, right? The opportunity to grow is quite strong. Now, the way we look at it is growth is going to come from new drug launches in the US that will keep happening as some of them come off patent. We have a lot of large companies that have filed these ANDAs, which are getting launched. And then you have companies like Sun Pharma, which are differentiating in the sense they're doing branded generics, which has an opportunity to scale up quite nicely. Plus, they have this acquisition which they're making, which will make them very large in scale, the opportunities to grow. So for us, Sun Pharma remains the top pick at this point of time in the large cap space, followed by Dr. Reddy's, which also we think has an opportunity. And then if you want to look at an India-specific, more India-focused company, then you can look at something like a Mankind Pharma, which is capturing more market share. We think the opportunity is quite strong there. Yes, the stock has seen a huge correction recently, but we think the company can do well over the next 2 to 3 years, and there's a huge opportunity for growth for them.
Yeah, absolutely. On that note, Samir, thanks so much for staying by. It was good to get a view on the pharma space before we head into the break. So thanks so much for that. We have to slip into a break. We'll be back on the other side to take you through the top strategies to bear in mind heading into the end of the week. Remember, we've got a market holiday tomorrow. Stay tuned. We'll be talking about a lot more on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer.
All right, let's quickly look at the markets before we move to our next set of conversations and what's happening this afternoon. We're going into a market holiday tomorrow, and that listlessness is showing on the screen. But, you know, that's only if you look at the Nifty. If you look at the advanced decline ratio, you look at the small caps, you look at individual stocks, that's where the action continues. Dilip Bhatt, founder Pedigree Advisory, joining us now. So is Shivangi Sarda, analyst equity derivatives and technical at MOFSL. Welcome to both of you. Shivangi, is there any point getting a Nifty view from you? Are you looking at the bank Nifty more closely?
Very good afternoon. Thank you for having me. So we've seen that the indices have, shown a very good comeback of the bulls. And even though we have kind of shown a little lackluster move in the first day of the June series, but overall the rollovers have been significantly fair. And looking at the overall structure, support-based buying is still intact in the index. We're looking at 23,700 as an important support here for the Nifty index for an upside move towards 24,200. Of course, a lot of unwinding is still required at 24,000, where call writers need to shift their position for the next leg of rally to commence. So some bit of consolidation move, but buy on decline overall to continue over here in the Nifty index. Of course, talking about the Bank Nifty, we've seen a good amount of action here earlier in the week, but from the last 2 days, we've seen a little bit of profit taking. Now, Bank Nifty, it needs to hold above 55,000. If it manages to cross and hold above these levels, then we would expect a kind of a good up move here, or else we would see this index again moving in a lackluster move. So 55,000 would be an important make or break zone here with the support of 54,750. It's a very near support, but it will decide the stance for the market, for the Bank Nifty for the next few sessions.
Just wondering what your picks are this afternoon, Shivangi?
So on my radar, of course, was Cummins, which has kind of, broken out. But similarly, I have my eyes on Siemens, which is, again, holding quite well. It has shown a price volume surge here with a very healthy bullish engulfing candle formation. The kind of closing that we're seeing at the day's high is quite positive here. And with the sector tailwind, of course, we'll be expecting a lot of action-packed move here. So this is one stock which is on radar for the next up move towards 4,020 levels and a support of 3,800 levels.
Got it. Okay, it's time for the NDTV Profit Spotlight. And this is on a couple of stocks that absolutely buzzing. Exide and Amara Raja. And I'd love to get a view on the fundamentals of these two. But before we do, let's set the context. And Puneet had this report earlier in the day. Listen in.
Well, Exide and Amara Raja now back in focus. You're seeing a sharper move on Exide today and likely some reaction post the results of Amara Raja yesterday as well. And we're putting the focus on them. Given that a 7% up move on Exide, Amara Raja also continues to be in the green. But is the stronger re-rating trigger largely because of the higher growth in the OEM business is the key question. Now, you've seen battery makers actually support and show a very strong growth in the OEM side. And basically the OEM business is for the car makers as well as for the two-wheeler makers as well. So Amara Raja reported a 30% growth in the OEM business, while the other businesses continued to show a decent mid to high single-digit growth. Telecom has actually continued to fall at this point of time, as the company highlighted that a lot of that business has moved from the lead acid to the lithium-ion battery business. But the OEM business continues to show a strong growth. Exide also reported a 25% growth in auto OEM growth, and hence maybe that could be one of the key triggers. You also have to look at the growth guidance both companies have now given. Now, Exide post Q4 had mentioned that a high single-digit to low double-digit growth is what they're expecting for FY27. Amara Raja has also given a similar growth for the industry as well. But why the sharper up move on Exide is also one of the other key question. Success in the new energy business, of course, remains a key for Amara Raja at this point of time. But Exide already has a partnership with Svolt for the lithium-ion battery business of the company, while Amara Raja is still awaiting a technical partner. They had a partnership with Goshen, but because of the Chinese nature of the ownership of that company, they're still awaiting some approvals and some more certainty in that business, what they said in the con call yesterday. You also see that Amara Raja is going first for the older NMC battery technology for the EV space versus LFPs, which is the more latest technology that Exide has preferred to go through as well. Finally, in terms of Amara Raja, Nuvama also now downgraded the counter today, with saying that the 25% surge in the last 2 months captures the growth momentum as well. And when you look at Nomura, they also maintain a neutral rating and highlighted that the lead acid business is the cash cow. But now with EVs progressing, you could see a reduction because EVs don't have lead acid batteries. So there's a lot to watch out for from the space, but clearly Exide having a much better faring in Q4 as well as on the share price today compared to Amara Raja.
Yeah, absolutely. That's exactly the point that I was going to make. Amara Raja gaining about 1.8%, 1.9%. Exide is up and about, right? It's significantly higher, 7-8% higher. Dilip, the question to you then, you listened to my colleague Puneet list out the reasons why the stocks are in focus, but what do you make of the fundamentals? Do you think that this is something that an investor should add to their portfolio?
So first and foremost, I think
let's understand that both the companies from their basic core business has always had cash flow from operations substantially good. So free cash flow was always generated for the business all throughout, especially for the lead batteries business is concerned. And I think just to take that point, that this time there was a good OEM growth that we have witnessed for both Amara Raja as well as for Exide. I think that can be against the backdrop of what we can understand is that there was a GST push which was given that led to a massive increase in the sales of some of the cars. I mean, in the entire automotive industry. So I think that partly possibly explains the bump up in the OEM sales. But really, for all these companies, the replacement is something that matters the most. But if the sheen in these companies have to continue, it is obviously going to be the new energy batteries, the EV batteries. And what is the capital intensity of this business and how quickly they will start making returns on that? And that is something which will drive the future valuations for this company. So if you ask me from the current level, whether the investors should buy, I would say yes. At least there seems to be a good momentum. And maybe from here on also, there seems to be something like another 20-25% a rise very much possible if you invest for next 8 to 12 months. So I would say, yes, the investors for an 8 to 12 months period can think of investing in both Amara Raja and Exide.
Okay, so at current valuations, at current prices as well. I just want to quickly look at what's happening with FDC and that spike that you're seeing in the stock. This is the first cut coming in. Net profits at 103 crores versus 38.7 crores. Big jump over there. Revenues have gone up about 19% at 585 crores versus 492 crores. And EBITDA is up 96.5% at 106 versus 54.1 crores. Just pull up that intraday chart if we can. And I'm going to quickly ask Shivangi for a view on it. Even the margin figure is robust, right? 18.2% versus 11% at this point. You're seeing the stock cool off after that initial spike, but still doing well. There is another income figure, which was there last time as well, 50 crores versus 16 crores. So it's come down to some extent. Shivangi, how do you look at FTC on the charts?
Looking at FTC, of course, from the last two sessions, this stock has kind of moved quite a bit. Even on the monthly basis, we've seen that the closing is kind of very positive, up by around 17% in this month so far. Now, the good part is that it has negated its lower top, lower bottom formation on the larger time frame, which does decide the new stance for the stock. But I would still recommend maintaining a stop loss here with a level of around 415 for the upside move towards 450 levels.
All right, so that's the view on FTC, continuing to hold with gains of about 5%, but losing a little bit of steam even as we speak. Varsha joining in to talk about stocks that are buzzing in trade, and quite a few of them actually. We mentioned this at the start of the program. Stocks that are up as much as 6, 7, 10%. Varsha, what's on your list right now?
Well, I would say a mixed set of companies that I'm going to cover today on the back of earnings. Let me start with, Morpen Lab, wherein overall weak set of numbers company has seen. If you see, there was a manufacturing scale-up and strategic investment which impacted, near-term profitability for the company. Overall revenue was up only 4%, but if you see, EBITDA was down 42% and margins were at 5% versus 9%. Even net profit was down 22%, so weak set of numbers there. Then you have AstraZeneca, again, a weak set of numbers posted by a company. If you see, so there was a revenue growth, good revenue growth, but lower other income impacted profitability for the company. Higher cost of material impacted margin, and if you see, margins were only 11% versus 18% last year, and you see net profit is down 23%, though revenue was up 20%. Then you have Gujarat Fluorochemicals, again weak set of numbers. If I were to talk about bulk chemical segments, witness a decline quarter on quarter. EBITDA and margins decline on higher operating expenses. Also, share of export export revenue, if you see, have declined, and the PAT is down almost 32%. So weak numbers there. Then lastly, you have Finolex Industries. If you see, overall revenue was up 12%. Good set of numbers. A good spike in EBITDA margin as well at 25% versus 14%. Now the revenue growth that you're seeing is led by a higher or better realization, and hence the margin uptick also. EBITDA improved to 25% and strong liquidity with free cash flow. So overall, three stocks which has given weak results. Finolex is the one which has given strong results, and hence the stock is up almost 7%.
Okay, Finolex Industries in focus. I want to look at two more stocks. I want to look at Coal India. Its OFS has already been subscribed 2x. Once the news of its OFS came, that stock opened quite low this morning. So remember, we've been giving you exclusive details on the whole Coal India story, and now it's a 2x subscription. If you had joined in on India Market Open this morning, you would have heard Kush Bora saying that at lower levels buy Coal India. There's an opportunity there. We'll ask Shivangi, Sada and Dilip what they think right now. The second stock I want to look at is LIC. Now, a Bloomberg report saying, and remember we have reported that there is going to be an LIC stake sale soon, but the Bloomberg report says the government may sell up to as much as 10,000 crores in LIC. They will begin marketing that stake sale in June. Remember, there is this overhang of when that stake sale will happen. Once we know it's happening, does it become an opportunity? I'm going to go to Dilip first, ask him about Coal India and LIC. Dilip.
So I think as far as Coal India is concerned, if there's an opportunity in the OFS segment, I would say yes, one should buy, most certainly, because the way the things are stacked up in Coal India, I think next 1.5 to 2 years looks pretty good, pretty interesting. Though it's very difficult to take a call on the commodity, as I always maintain, to take a very secular long-term view. But still, the way the things are stacked up, I think Coal India on a consolidated basis will still continue to do very strongly. And that's what we think. This certainly merits investment in the OFS without any doubt.
If you don't get the OFS already 2 times subscribed, like we said. So without the OFS option also worth taking right now, as you see it, cash market, current rate.
So what I would say is that without, even if you don't get it in OFS, if you buy it from the open market, I would still say that there is a reasonable 15 to 20% appreciation that is very much possible over next 8 to 12 months is what I would think. And not to forget the very high dividend yield that it offers, which is a huge attraction for anyone. So I think all in all, yes, it merits an investment in the open market as well as in the OFS.
Okay. I'm going to get a quick view from Shivangi on Coal India before we ask Dilip about LIC. That's the second stock we were discussing. Shivangi.
Coal India has been quite a trader stock for that matter, and we've seen that a lot of good action can be seen here. This would definitely be under my radar, but of course it's a highly volatile stock, so one has to play the swing with a strict stop loss itself. Positionally, the stock looks quite positive, but on an immediate basis, we might continue to see swings here. Of course, the stock is up massively in the recent times, but we could see an up move to round about 480 odd levels on an immediate basis, and 450 would be an important support to watch out.
View on Coal India. Let's go across to my colleague Danish. She's standing by to get you an interesting story. Airlines are apparently trimming their capacity as demand softens, and that's according to sources. Air India and Indigo planning calibrated flight cuts between June and August. Let's find out what exactly they're saying, though. Danish, what are you picking up?
Well, that's correct. Both these airlines are going to cut certain frequencies on certain domestic routes, and these are especially going to be those routes which are short haul and which are like under 90 minutes flights. These could be the ones that could see frequency going down. Besides that, both industry sources have clarified to NDTV Profit that despite the reduction in frequencies, there will not be any impact or any kind of a strain on the overall flight operations of these airlines. And moreover, Indigo sources have also informed that the cut that is planned for the next 3 months is as per the yearly practice, because usually these 3 months see very less demand, and hence the flights are going to be cut. And very lastly, Indigo sources have told NDTV Profit that as the festive season approaches, these flights will be reinstated. So overall, if we see while Air India is going to cut flights because of the West Asia impact, for Indigo it is more of a seasonal reason why Indigo is going to cut flights for the next 3 months.
Got it. All right. So that's certainly something to bear in mind. By the way, there's clearly an update that you have to pay attention to with regard to the weather, and this is an India Met Department guideline, or rather warning that has been sent out. Heat wave to severe heat wave conditions are likely to continue over central and northwest India over the next 2 to 3 days. A reduction in the maximum temperature, abatement of heat wave conditions likely from the 29th of May onwards. Isolated heavy to very heavy rainfall is expected over northeast and adjoining East India during the next 2 to 3 days, and over South Peninsular India today, that is the 27th of May, and over Tamil Nadu, Puducherry and Karaikal during the 27th to 29th May time frame. Moderate to heavy or severe thunderstorm activity is expected, with squally wind speed reaching as much as 70 kilometers per hour over northwest India, central India and East India during the 28th to 30th May period. But the most important part, of course, has to do with the heat wave conditions over the next 2 to 3 days. Let me hand it over to Tamanna to see how the markets are closing now.
Not hot at all. Tepid. There is no heat wave happening here. At least you've dipped a toe back into the green territory. Closing completely flat before that midweek market holiday, and that's where the Nifty lies. But at least you're not closing with any great losses. We'll pull up the Nifty heat map as we go into the last few minutes of the closing bell and see what's happening there. Tata Motors PV zooming to the top spot. Once again, it's all about autos for some time now. Bajaj Auto also has been steadily doing very well, because now you know that the promoters are not going to come back into that buyback. That's excited the market. Eternal has been having a good run. Hindalco, we talked about. ONGC, it gets worse and worse, right, for ONGC after its results, and of course with crude cooling off. HDFC Bank, ITC and HDFC Life, I think also following HDFC Bank, they're in the pain point. Can you quickly pull up Nifty contributors, because it's pretty much a couple of stocks which are pulling down the market largely. Just look at that. 65 out of the 121 points that are in the negative are only from HDFC, and then the rest made up between ITC and ONGC. So this is the pain point over here. But in the broader markets, it's a slightly better picture, isn't it?
It is. And just to the point on auto and metal, right? So these two sectors are in focus. Mid-cap index is up 0.4%. Small cap index will be approximately that as well. The Nifty Next 50 really is the star of the day today. But pull up the heat map for the sectoral indices, and you will see that on the top you have media index on account of Z Entertainment. That was one of the stories. You have auto that once again is gaining for the 7th straight session, 1.7%. Just a short region behind that is the Nifty Metal. It's interesting because you have Hyundai that has announced price increases today of up to 12,800. They're having to pass on input prices, but because demand is robust, you have customers that are absorbing those price increases, which is good news for the steel companies as well.
But it's actually going to be a positive, as not just Hyundai and auto majors, even as FMCG players start passing on prices. From an investor perspective, it's good that that's actually happening. Nifty Media up thanks to Z. But how are we closing this Wednesday afternoon? You're closing pretty mild, I would say. Pull up the top gainers and losers on the broader markets before we wrap up on the show today. Adani Total 14% up. Cummins on the basis of its numbers. PNG held again. Good set of numbers. Delta Corp, that Supreme Court hearing is on, and that could be important from them from a policy perspective of what's happening with gaming. Finolex again, numbers coming in, earnings coming in. Z Entertainment, of course, with the hope that they might get FIFA rights. On the losing side, you have an AstraZeneca, a Polymed second day in a row actually after its numbers, seeing that pain, shipping, easy trip, some of those that are coming in.
So, but broadly, this is what you'll close Wednesday at. I wonder what the action will be at the start of Friday, because a lot can happen over the course of 24 hours. And I think I'd watch the crude oil prices very, very closely. But that's all on this edition of India Market Close from Tamanna and myself and the team that put this show together. Thank you so much for watching. Stay tuned. Lots more coming up on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all in.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that has happened in today's trading session, as well as news and updates from within the country and across the globe. But first things first, let's talk about markets. Then markets in fact lacked direction today, and the Nifty is the one that hovered near 23,900 even at close, as you can very clearly see on your screens as well. Just 7 points higher than that level that I mentioned, while the Sensex also slipped slightly as cautious sentiment kept bulls and bears in a tight tussle. And let's also talk about the sectoral picture. Then broad-based buying supported the market today. Most sectors closed in the green, with energy and metals really leading the charge, while financials and oil and gas were the top laggards on the other side. Let's also talk about metal stocks with a sharper focus, because you do have global aluminium prices that moved higher, lifting sentiment across the sector. So something like a Hindalco or even a Nalco really led the gains on the Nifty Metal Index, as you can very clearly see on your screens as well. About 4% plus uptick coming in for both of those counters that I mentioned, with all constituent stocks for this particular sector as well trading firmly in the positive territory during the session. Let's also move on and talk about Just Engineering, that posted a strong set of numbers in the fourth quarter, with profitability improving sharply despite a modest rise when it comes to revenue. And that particular counter was gaining in trade, with that 6% uptick coming in. Margin expansion, better execution and operating leverage really helped cushion global headwinds, while higher other income further boosted bottom line growth during the quarter. When you talk about the word coming in from the management as well, they've in fact told NDTV Profit that they do expect margin expansion to remain sustainable. Let's move on and talk about Gujarat Fluorochemicals, that reported a subdued set of numbers in the fourth quarter, as weakness in its bulk chemicals business and rising operating expenses weighed heavily on earnings. The company in fact also saw a decline coming in when you talk about the export revenue contribution during this particular quarter, adding further pressure to profitability. EBITDA margins contracted as costs remained elevated, while the profit after tax also dropped sharply and by over 30%, reflecting the challenging operating environment for the chemicals player despite steady revenue trends. Let's move on and talk about Landmark Cars, that delivered a strong set of fourth quarter numbers, and the street was unimpressed though, with the company's after-sales segment clocked its strongest ever quarterly performance. Some bit of profit booking that you saw on the back of this strong set of numbers. You do have the profitability that was driven up higher as well, and the auto retailer also reported its highest ever annual EBITDA for FY26, supported by healthy demand across segments, benefit from GST rationalization, and even momentum really coming in from some of those new launches. Better cost discipline also further strengthened this particular quarter, with employee expenses and other operating costs remaining below internal targets, helping margins improve despite a competitive environment. Let's also move on and talk about Finolex Industries, that reported an improved operating performance, really reflected through in the stock price as well. That strong fine print, 8.5% uptick coming in, supported by better realizations during this particular quarter. And when you talk about the earnings a little more, EBITDA margins also strengthened to somewhere close to around 25%, reflecting improved profitability and operating efficiency. Now the company has also continued to maintain a strong balance sheet position, ending the period with free cash and net liquidity of somewhere close to 2,500 crore rupees, providing financial flexibility for future growth and expansion opportunities. Let's move on and talk about Translate Lighting, that reported a softer set of numbers for the fourth quarter, as execution challenges and cost pressures really weighed on the profitability. When you talk about this particular counter, about 5.5% downtick coming in, and the revenues declined marginally on a year-on-year basis, while EBITDA and margins also came under pressure. The weaker operating performance in fact impacted the bottom line, with net profit falling sharply during the quarter amid margin compression across projects. Let's move on and talk about Siemens India, that reported a mixed set of numbers for the fourth quarter. The street was quite impressed by some of the good parts of this particular earnings fine print. Now the revenue growth remained rather healthy, but profitability is the one that came under pressure. EBITDA margins weakened sharply during the quarter while net profit declined significantly, reflecting cost pressures and softer operating performance, and that's despite higher top-line growth. Let's also move on and talk about Hindalco now. Shares of Hindalco Industries jumped as global aluminium prices climbed to a 4-year high amid escalating Middle East tensions and fears of tighter global supply as well. So concerns over possible disruptions around the Strait of Hormuz, along with restrictions and some of those risks coming in terms of production cuts in China, have sharply boosted sentiment across metal stocks. You do have that uptick really that we've talked about earlier as well. So investors really betting on stronger realizations when you take a deeper look when it comes to some of your aluminium producers. Let's also move on and talk about the update coming in when you talk about Morgan Stanley in terms of them initiating coverage with an overweight rating and a target price of close to 1,300 rupees. The brokerage, in fact, believes that tighter global aluminium supply and sustained demand strength could really keep prices elevated for longer and supporting earnings visibility. Morgan Stanley, in fact, also highlighted Hindalco's strong free cash flow potential, ongoing capacity expansion plans, and some of your long-term value unlocking opportunities is something that they've highlighted, while expecting Novelis to see a recovery phase led by expansion from FY28 onwards. Let's move on and talk about the government launching an offer for sale when it comes to Coal India, and that particular counter was buzzing away in trade, but it did give up some of those gains as well, with a base issue size of 5,000 crore rupees along with a green shoe option of another 2,500 crore rupees. NDTV Profit's news break has now been officially confirmed though, with the indicative floor price set at 412 rupees per share, nearly a 10% discount to the current market price. The OFS, in fact, is expected to draw stronger investor interest given the company's dominant market position and attractive dividend profile. Let's also move on and talk about CleanMax Enviro, that has raised $575 million to accelerate expansion across renewable energy projects, marking a significant funding boost for its clean power ambitions. The company, in fact, has also successfully commissioned 351 close to megawatt peak capacity, and that's at the Bikaner solar park as well, strengthening its presence when it comes to India's fast-growing renewable energy sector. Let's also move on and talk about Ramco Industries, that was in focus on the back of a strong set of numbers in the fourth quarter, as you can see on your screens as well. About a 4% uptick is what you had coming in for this particular counter. And robust growth across revenue is one clue hidden there, and operating profit and net profit also. You've seen good performance coming in. EBITDA margins improved sharply during this particular quarter, supported by better operating leverage and improved business performance, while profits also received a boost coming in from a one-time gain. Let's also move on and talk about Hitachi Energy, that is seeing stronger brokerage optimism after Jefferies maintained its buy rating and sharply raised the target price to somewhere close to 43,000 rupees from 25,000 rupees earlier. The brokerage, in fact, believes that the company is entering a multi-year structural growth phase driven by rising demand when it comes to HVDC projects, data centers, and export opportunities. Also, something that they've highlighted here, Jefferies, in fact, has also upgraded FY27 and FY28 estimates, citing some of that improving visibility, stronger margins, and fresh capacity expansion plans. Let's also talk about Morphin Labs, that reported a mixed set of numbers, and that stock was trading with a downtick of about 4%, with the revenue growth remaining modest, profitability coming in under pressure due to manufacturing scale-up and strategic investments. When you talk about EBITDA and margins as well, they declined sharply during the quarter, reflecting higher operating costs linked to expansion initiatives, even as the company continued investing for future growth. Let's move on and talk about AstraZeneca's pharma. The company's strong sort of performance coming in on the back of revenue growth in the fourth quarter, but profitability that actually remained weakened sharply due to higher material costs and lower other income as well. So about 3.5% downtick coming in on this particular counter. EBITDA margins also nearly halved during the quarter, while net profit also declined despite healthy top-line performance, highlighting rising cost pressures across operations. Let's also move on and talk about tax authorities that have accused Pernod Ricard of misdeclaring the composition and age of imported Scotch whisky to reduce customs duties in India. In fact, the allegations are part of an ongoing investigation into tariff payments and import practices. The company is yet to publicly respond in detail to these claims. Let's move on and talk about some business news now. Baidu's founder, Baiju Ravindran, has been sentenced to 6 months in jail by a Singapore court in a contempt case linked to investor disputes and even asset disclosure violations. Now, the court has found him guilty of breaching multiple directions issued since April 2024, including orders related to ownership disclosures. For some of the companies, the ruling marks another major setback coming in from the beleaguered tech company amid mounting global creditor action and legal scrutiny as well. Let's move on and talk about Hong Kong, that has overtaken Switzerland as the top global booking center for cross-border wealth, a first that is unlikely to be reversed as hubs in Asia, in fact, grow faster than some of their European peers. According to Boston Consulting Group, wealth from China and an IPO boom in 2025 helped Hong Kong rise to $2.95 trillion offshore behemoth for the world's rich, narrowly surpassing Switzerland's $2.94 trillion in cross-border wealth as well, according to BCG's 2026 Global Wealth Report. Let's move on and talk about European Central Bank in terms of the word coming in there. And the Vice President, in fact, has warned that Eurozone banks must step up investments when it comes to cybersecurity as advanced models really become increasingly capable of identifying software vulnerabilities. The ECB, in fact, has cautioned that financial institutions need stronger safeguards when it comes to faster deployment of security systems to manage emerging risks linked to artificial intelligence and even digital infrastructure. Let's also move on and talk about the artificial intelligence boom that is creating a fresh wave of trillion-dollar technology giants, with SK Hynix and Micron Technology really crossing the $1 trillion market valuation mark. Surging demand for AI data centers and advanced memory chips has fueled a sharp rally when it comes to semiconductor stocks, with investors betting heavily on some of these companies supplying the infrastructure behind next-generation AI systems that you and I talk about. The rally also reflects intensifying global demand for high-performance chips amid persistent supply shortages. Let's move on to national news now. The Enforcement Directorate has carried out raids linked to the CMRL payoff case, including searches at premises associated with former Kerala Chief Minister Vijayan as well. And the action is also part of an ongoing money laundering investigation connected to alleged financial transactions involving the mining company. The development has intensified the political heat in the state. Let's move on and talk about the word coming in from health authorities in Bengaluru that have confirmed that a traveler from Uganda who was isolated over suspected Ebola symptoms has tested negative for the virus. The passenger had been kept under observation as a precautionary measure, mind you, after arriving from the affected region. Officials are saying that there is no cause for concern at this point in time, but monitoring protocols remain in place. Let's also talk about the CBI making a major breakthrough when it comes to the NEET UG 2026 paper leak investigation, identifying what it calls the actual source of the leaked chemistry, biology, and physics question papers. 2 more people have been arrested as the probe really widens into the examination controversy that sparked nationwide concern over the integrity of the medical entrance process. Onto Air India now, that had a flight that was headed to San Francisco that was forced to return to the national capital after a technical snag was detected mid-flight. So the Boeing 777 aircraft carrying around 230 passengers remained airborne for more than 8 hours before safely landing back in the national capital. And the airline has also said that the aircraft returned in line with standard safety protocols and will now be undergoing a detailed technical inspection going forward as well. Let's also move on and talk about a very important update coming in. A massive forest fire near the Air Force Station in Kasauli triggered a large emergency response, with the Indian Air Force in fact deploying Mi-17 and Chinook helicopters to battle the blaze. Officials said that the fire spread rapidly across some of the forest areas, forcing aerial firefighting operations in inaccessible terrain as well. Water was lifted from the Sukna Lake as teams from the forest and fire departments continued efforts to contain the flames amid rising temperatures across the region. And on to international news now. A massive fire has broken out at a Jewish supermarket in London's Golders Green area, prompting a major emergency response. Around 100 firefighters have been deployed to control the blaze, with nearby buildings evacuated as a precaution as well. Authorities are investigating the cause of the fire, while no immediate reports of casualties have emerged. Let's also talk about war updates then. Israel has launched one of its heaviest waves of strikes across southern and eastern Lebanon since the April ceasefire, after PM Netanyahu in fact vowed to intensify military action against Hezbollah. And you do have Lebanese authorities that said at least 31 people, including children, were killed in the bombardment, while the Israeli military claimed it targeted more than 100 Hezbollah-linked sites and firefighters as well. And fresh sirens were also triggered in northern Israel after a projectile was launched from Lebanon overnight, further raising fears of a broader regional escalation. Let's move on and talk about Pope Leo then, who's voiced concern over the worsening conflict in Ukraine, condemning what he called a sharp escalation in violence and rising civilian casualties. Addressing pilgrims during his weekly audience at the Vatican, you do have the first American Pope who said that war only deepens suffering and hatred instead of delivering security or solutions. So that's some strong wording coming in there for the first time there. And his remarks, in fact, come amid renewed attacks and growing fears of a prolonged conflict in the region. Let's move on and talk about South Korea, that has said an attack on a cargo vessel operated by local shipper HMM in the Strait of Hormuz earlier this month likely involved an Iranian anti-ship missile as well. And investigators found debris inside the damaged vessel, indicating components linked to Iranian-made turbojet engines, with officials confirming the ship was struck twice during the attack. The incident has added to growing concerns over maritime security and escalating tensions around one of the world's most critical energy trade routes. Let's move on and talk about some sports news. And Royal Challengers Bengaluru are through to the IPL final after defeating Jos Buttler's Gujarat Titans in a high-pressure clash. You do have RCB that delivered a strong all-round performance to seal their place in the title match, keeping alive hopes of a maiden IPL trophy. Gujarat, meanwhile, fall short despite another key contribution coming in from Butler. Let's move on and talk about chess now. D. Gukesh and R. Pragnanda endured a difficult outing at the Norway Chess in Oslo, with both Indian stars suffering setbacks after promising starts. In fact, Gukesh also failed to convert his advantage against Wesley So before losing in Armageddon, while France's in-form Alireza Firoza also outplayed Pragnanda to move to the top of the standings. Meanwhile, defending champions Magnus Carlsen survived another major scare against Germany's Vincent Keimer, eventually clinching an Armageddon win, also coming in to register his first points of the tournament after yet another intense battle. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Nifty holds firm above 23,900 level, but bulls stay cautious today. Benchmarks trade in a narrow range as the Lal Street catches some breather after yesterday's sell-off. HDFC Bank and ITC add more pressure to Nifty. Rupee too remains muted at 95 rupees 70 paise against the dollar. Oil prices pull back nearly 4% as investors keep a close watch on peace negotiations in Iran war. Iran guards the official says low possibility of renewed war with US. Reports suggest Trump to meet his cabinet to end the 3-month-long conflict. Iran's nuclear dust blurs clarity. Cabinet gives nod to 25,000 crore rupees overhaul of Sarthak public distribution system, a digital push for India's food security network. Shares of HDFC Bank fall over 2.5% after media reports raise governance concerns. HDFC Bank allegedly camouflaged crores as marketing spends to pay higher interest to state firm. But the bank rejects any wrongdoing in response to NDTV Profit. Baiju's founder Ravindran mounts defense against Singapore court sentencing him to 6 months in jail in a contempt case, adding to the edtech firm's growing legal troubles. Middle East crisis hits aviation sector. Air India and Indigo to cut domestic flight operations between June to August amid weak seasonal demand and rising fuel costs. In a landmark ruling, top court upholds the government's decision to impose 28% GST on online gaming, delivering a major setback to the gaming industry in the massive 2.5 lakh crore rupees tax dispute. Auto demand remained strong in the month of May, with Vahan registrations rising over 11% annually and nearing record highs, signalling broad-based momentum across the vehicle segments. Inside track on Karnataka, Chief Minister tussle. Sources tell NDTV that DKS swearing in is likely this week. New government to have more than one deputy chief minister. All eyes on tomorrow's breakfast meeting. Sources tell NDTV that Siddaramaiah is likely to resign after DKS meet. Tamil Nadu Chief Minister Vijay's maiden Delhi darshan as Chief Minister. Vijay likely to meet Prime Minister Modi in Delhi. Vijay looks to reset Tamil Nadu centre ties. Hello and welcome. You tuned into Profit 360. I'm Nisha Podar. Let's take you through all the top stories that you need to know at this hour. Now, let's first begin with the market action today. After yesterday's sharp bout of profit booking, well, markets took a breather today and traded in a narrow range, and the benchmarks ended largely flat, with the Nifty near 23,900 mark and the Sensex above 75,700. Now, the broader markets, however, showed relative resilience today. Mid-cap as well as indices really avoided any major swings and also slightly outperformed the benchmarks through the session. In fact, my colleague Parth is joining in to give us the entire market roundup for the day. Tell us, Parth.
So Nifty ends on a flat note, down just 0.03% today. Tata Motors and Hindalco were the top gainers in Nifty, both up by over 4%, while ONGC and HDFC Bank were the top losers in Nifty, with ONGC falling over 4.5%, followed by HDFC Bank, which was down over 2.5% today. The broader market has outperformed the benchmark today, with the Nifty Midcap 150 ending in green for the fourth day in a row, up by over 0.4% today, led by Adani Total Gas and Cummins India, both of which were the top gainers in Nifty Midcap 150, up by 11% today. Nifty Small Cap 250 also ended in green for the third consecutive day, up by over 0.5%. This was led by JP Power and Z Entertainment, which were the top gainers in Nifty Small Cap 250. JP Power jumped almost 20% today, while Z Entertainment was up by over 10% today. Now, moving on to the sectoral indices, they ended on a mixed note, with Nifty Energy being the best performing sector, up by almost 2%, led by JP Power and Adani Total Gas. Adani Total Gas was up by over 13% today, while JP Power gained almost 20%. Nifty Financial Services, on the other hand, was the worst performing sector, down by almost 0.5%, which was led by BSE and HDFC Bank, both of which were down by almost 2.5% today. Nifty Financial Services, Nifty Bank, Nifty Oil and Gas and Nifty IT have fallen for the second day in a row, while Nifty Energy has gained for the third consecutive day. Nifty Metal also gains for the sixth day in a row, while Nifty Auto has gained for the seventh consecutive day.
All right, thanks, Pat, for getting us the entire market action for the day. Well, the oil prices, they cooled off today as traders closely tracked the developments in the ongoing US-Iran negotiations, and Brent crude slipped nearly 3.5% to around $96 a barrel, while US WTI fell about 4% to near $90 a barrel. Now, as the market now tries to really assess whether diplomacy can still move forward despite rising tensions in the Middle East, well, rupee too remains under control today, and there was hardly any change in the rupee value today, keeping the domestic currency tightly near 95 rupees 70 odd paise against the dollar. All right, moving on to one big corporate development then of the day, and shares of HDFC Bank remained under pressure after reports raised concerns over the bank's governance practices. But the bank, in response to NDTV Profit, has rejected any wrongdoing. In fact, my colleague Piyush gets us the full account of the development. Piyush, tell us.
Right, HDFC Bank in a statement to NDTV Profit said that in response to the Indian Express report, they have said that the bank maintains robust internal oversights. There are set processes. All the any investigation that is being done is done through a process, already laid out process, and they take corrective actions in cases necessary. The bank has rejected assumptions of any wrongdoing by any of its executives. Now, this comes on the back of HDFC Bank has seen a slew of negative developments over the last couple of months, ever since its former chairman, Mr. Atanu Chakraborty, resigned, citing certain differences with the business practices of the bank and his own policies. Now, the Express report had said that HDFC Bank provided MSRDC savings account, which typically the rate is at 3.5%, but they were promised 6.1%, and to fill that upwards of 2.5% interest rate, they routed this additional 45 crore payment to MSRDC via their marketing budget. Now, sources in the banking industry say that this is sort of a common practice that some of the lenders do, but in HDFC Bank's case, the quantum is slightly higher, and hence this needs highlighting, and also the fact that the board was aware of such practices and did not really take corrective actions immediately. This is something which has resulted in HDFC Bank stock, reacting adversely. And over the last couple of months, the bank's share price actually has risen quite sharply, giving pain to both retail and institutional investors.
All right, so biggest dragger there, HDFC Bank, on those news reports. Now, in a landmark ruling, the Supreme Court has upheld the government's decision to impose 28% GST on online gaming, delivering a major setback to the industry in the massive 2.5 lakh crore rupees tax dispute. Now, the court calls it a valid imposition of tax, meaning that GST can be levied on the full value of player deposits and not just on the platform's revenue or commission earnings. In fact, my colleague Nimit joins in with all the details on the court observations and what the order means. Nimit, tell us.
Yes, so the Supreme Court has upheld the 28% tax GST imposition that the government put out last year against all these gaming companies. Now, this has been a dispute that's been ongoing for about 9 years now. Since 2017, notices have been issued, and till date, these notices pile up to about 2.5 lakh crore. Most of these numbers outweigh even the market caps of a lot of these gaming companies, which say that they will not be able to survive. And now that likely is going to become the case, because the Supreme Court has upheld the GST application by the government to 28%. And the important part is, what is this 28% upheld on? On the platform fee or on the revenue? The companies argued that they should be only levied on the revenue that they generate, because that is what they're making and that is what they should be taxed on. But the Supreme Court upheld the center's argument here that it should be levied on 100% of the fee, that is, or the amount put in by the participant on the platform. Now, this was the big point of contention. The second big point of contention was about when this tax notice should apply from, because these tax notices, the 28% law change was first proposed only in 2023. Now, because of this, they said that these claims that go all the way back to 2017 should not apply, because that's retrospective application of law, which is generally not allowed. The Supreme Court has said here that this law in 2023 was only clarificatory in nature. Means it was not a new law, it merely clarified the position that this will be payable, 28% will be payable on the entire amount. So the notices from 2017 onwards were upheld here. Now, a few of the big companies here that will be affected are Delta Corp, which has a 33 lakh crore, I apologize, claim there. And these other companies, Dream 11, for example, Games 24, Nazara Tex, GamesCraft, MPL, Winzo, have all been appealing in the Supreme Court, and this is they've all been turned down here today in one complete judgment. Lastly, I'd like to say that the Karnataka and Tamil Nadu bans on online gaming were also upheld in a separate point made by the court.
Yeah, some important points there, and thanks Nimit for breaking it down for us. It's a big blow coming in for online gaming companies. Let's understand this implication and also the judgment with a corporate lawyer. Khushbu Jain joins in. Khushbu, what do you make of the sense that you got from this particular order in terms of deposits versus the actual revenue and commission, GST applicability on that? Khushbu, can you hear me?
Yeah. See, the bench specifically ruled in favor of the government, deciding on two major parameters. And both the parameters are, number one, the first parameter, that they have let go of the skill and the chance, which is irrelevant when it comes to tax perspective. They say that even if the game requires heavy skill, like rummy or a fantasy sports or etc., once the real money is staked on an uncertain outcome, the set of functions as a taxable, actionable claim under the betting and a gambling framework. This was the first aspect, that skill or chance has no relevance when it comes to taxation part of it. The second was, the retrospective aspect that we're talking about, that backdated demands stand. What is the stand? The court here also confirmed that 2023 amendments were indeed a clarifactory part of it, not an act itself. This makes the retrospective tax demands legally valid, allowing authorities to process massive backdated tax demands which are being looked upon or has been looked into. Now, if you see this, it can be pursued in two manners. It can be pursued in a manner that one side of it which says very clearly that there is an industry or a valid, which is not a gambling industry but a betting industry, which were valid, and such heavy taxation at the retrospective stage will be very detrimental for their same time. If you look into the present condition where PROG Act is applicable and the rules that has come in this month, these two make it very clear that whatever said done, whether you're a skill or a chance, anything which has to do with the online gaming where money is involved, it's itself completely banned. So I think it's a combination of a lot of things that we are seeing today. The order that has come today with the retrospective part is much after the central act that has come, which has let go of the state-related laws which were there when it comes to skill and chance and, what they have to allow and not allow. So if you look into a holistic manner, today's judgment after PROG Act and the rules that have come in force, which has let go or completely ban on any kind of online gamings which involve money, complete ban on it, is something which has to be looked upon along with this, with a retrospective aspect where they're saying that this is not retrospective, because retrospective for a law which is made, to be applicable from an after date, actionable claim on a retrospective manner, they have said that there was no law. It was just a clarification that came in existence in the year 2023. industry. I
That's
think
right.
the whole
So there is no retrospectivity over here. But Khushbu, very quickly, what is the precedence that it sets, and what will be the impact? Very quickly.
So precedent part, see, if you have to look into it on the GST part of it, see, it's a very peculiar case. It won't be considered as a precedent in itself, because precedence comes only when the aspect that this is gonna create any kind of precedent. But this is a very, very peculiar case in itself, where they have clarified that this was just a clarification. This was not a law.
That's
Hence,
right. There was no
therefore,
law. It's also a new sector in India, Khushbu, and there is not much. So it's a unique case, but definitely it's a setback for the industry, with the court really upholding the government's understanding on this. But thank you so much for joining in with your expert take on this particular matter. All right, let's take it forward to another important development of the day, and the cabinet has approved the 25,000 crore rupees Sarthak PDS scheme, a major digital push to really modernize India's public distribution system over the next 5 years. Now, the platform aims to streamline fruit grain movement, improve the delivery efficiency, and also strengthen food security operations across states. Union Minister Ashwini Vaishnav said that the move is not a replacement of the existing PDS system, but part of a broader structural reform to really make the delivery mechanism much more efficient. Let's listen.
ये रिप्लेसमेंट नहीं है एग्जिस्टिंग पीडीएस का, और इसका संबंध प्रधानमंत्री गरीब कल्याण अन्न योजना के एक्सटेंशन के साथ भी इसका कोई संबंध नहीं है. ये सुधार है पीडीएस के सिस्टम में, पूरे डिलीवरी सिस्टम में, लॉजिस्टिक्स में, ट्रांसपोर्टेशन में, मटेरियल हैंडलिंग में, और पीडीएस के बेनिफिशियरीज की ग्रीवेंस के रिड्रेसल के लिए उसमें बहुत बड़ा ये स्ट्रक्चरल रिफॉर्म है.
Right, the legal troubles for Byju's founder Byju Ravindran has really deepened further. A Singapore court has sentenced him to 6 months in jail in a contempt of court case. Now, making a major escalation in the edtech firm's ongoing crisis. This adds to their trouble, really. And Nimit Dixit is here with more details on the court order, Ravindran's response, and what legal options that remain available to him going forward. Tell us, Nimit, will he go to jail, and what is the legal recourse here?
In a contempt proceeding like this, where 6 months jail sentence has been granted, Singaporean legal experts tell me that a person can only be arrested if they are within the territorial jurisdiction of Singapore. That means physically present in Singapore. Beyond that, it's very difficult to enforce this. There is, of course, the extradition proceedings, but that usually doesn't apply for small cases like this. India does have an extradition agreement with Singapore, but that doesn't apply for cases where jail time is under 1 year. So Singapore legal experts tell me that it's going to be very difficult, firstly, to put him in jail unless he voluntarily comes and surrenders or flies into Singapore for some other work. So that's that. But to understand why this has happened, this is a case that arises out of an arbitration proceeding. A judgment came in 2024. It was by the Qatar Investment Authority, and an arbitration award came where it froze about $250 million worth of assets of Byju's and Think and Learn, which is their holding company. Now, after that, there was an asset disclosure requirement because these assets needed to be frozen and then liquidated for the purposes of serving this award. Now, once this asset disclosure was required, this asset disclosure is what Byju Ravindran did not adhere to over the span of 2 years. Many requests have been made to disclose these assets, specifically certain different assets over different jurisdictions, but Byju Ravindran has not disclosed those assets, and that's why a contempt of court order has been filed by the Singapore court, and then now sentenced Byju Ravindran to 6 months in jail. Now, what he says is that he's not been attending these proceedings or been making these disclosures because they're actually very close to a settlement, and he's actually shocked that Qatar Investment has approached the Singapore court for this kind of an order.
All right. Thanks, Nimit, for putting all that into perspective. Yes, it's a big legal trouble for Byju's founder. Now, Mphasis has launched Mphasis Traya, its new enterprise AI platform aimed at helping businesses deploy the autonomous AI agents and drive better outcomes. In fact, CEO and MD Nitin Rakesh said one of the biggest challenges for enterprises today is the agency gap, where AI systems still require human intervention. Let's listen in to what he had to say.
Today, AI is a hammer looking for a nail, especially agentic AI. We launched a first of its kind enterprise agency platform. That isn't giving you a set of tools that you can use as you wish, but it's actually connecting the insight that sits within your enterprise systems to the foresight that we will give you the ability to drive, and connecting that to the execution where you can actually have these autonomous agents operate on your behalf.
All right, moving on. Airlines are trimming capacity as demand really softens, according to sources. Air India and Indigo plan calibrated flight cuts between June and August, citing weak seasonal travel and also high fuel costs. What are the reasons? My colleague Danish explains, and also how big a hit could it be for travelers like you and me, Danish?
Well, that's correct. Both these main airlines have decided to curtail their frequencies and domestic flights for the next 3 months. And while for Indigo, this is happening as per its yearly exercise, because usually in the span of these 3 months, the seasonal demand is quite low, and hence Indigo will be cutting back its flights this year as well. In fact, last year during the same time around, Indigo had reduced its flights by 10%. So the final number is yet to come from the airline, but it could be somewhere in single digits. Whereas on the other hand, for Air India, this domestic flight cut is largely in line with the international flight cuts that it had announced earlier. So this is going to happen for the next 3 months. Moreover, Air India has clearly said that one of the major reasons why this flight cut is happening, it is because of the high ATF cost, and hence this flight cut is taking place. But as far as the impact on the passengers is concerned, both airlines have reassured that while the frequencies will go down, but it will not impact or create any kind of pressure on the operating on the entire operations of the airlines. So all in all, if we see this practice is also being done in line with the usual industry practice when there is a lean particular period, and that's when these flights are trimmed. Both these airlines are expected to soon issue the details that which cities will see the cut in frequency.
Stay with us. Even corporate India is tightening its belt, and travel is the first casualty of that. Industry data suggests that corporate bookings are now down in double digits, with cancellations as well as rescheduling also rising sharply. Danish, also break down that for us, and also the reasons and how enormous is the impact.
Well, the corporate travel has gone down, especially in the past 3 months, and this data is coming from Ease My Trip and Faith, which is an industry association. So they're saying that this moderation in demand was there from the past 3 months, and it actually began just after the West Asia crisis started. Besides that, as far as the domestic cut by corporates is concerned, it is kind of in a much larger scale. And on the other hand, even the international flights, the corporates that usually fly international routes, even that has been reduced in double figures. The main reason is because of the West Asia crisis and the impact. But on the other hand, the experts are saying that this is happening because the corporates and the businesses are already facing a lot of challenges because of the high oil prices and its overall impact on inflation. So that is why we have also seen that very recently, big corporates like Maruti Suzuki, which recently yesterday announced that it has ordered its employees to cut down its unnecessary international and domestic travel. Similarly, we are seeing that Finance Ministry also some time back had issued these directions. So overall, this particular moderation is expected to continue for the next few months until and unless the war is not over.
Right. Thanks, Danish, for taking us through all those important details when it comes to how India flies. Now, the banking industry has really raised concerns over RBI's proposed curbs on digital payments aimed at tackling the cyber fraud. And the bankers have really opposed the proposal to really introduce a 1-hour delay on online transfers above 10,000 rupees, saying the limit is too low and could really impact UPI growth. In fact, the industry players are urging the RBI to raise the threshold to at least 25,000 rupees, while also seeking exemptions for emergency and tax-related transactions. Payments executives have also flagged practical challenges in implementing some of the proposed controls there. And the push comes as digital fraud cases really rose to 28 lakh in 2025, with the total value of frauds really crossing 22,900 crore rupees. All right, moving on to some political developments of the day, and suspense over Karnataka Chief Minister is near its biggest climax that we are seeing. As per sources, Siddaramaiah might step down tomorrow and DKS likely to really take oath this particular week. Rahul Gandhi will be attending DKS swearing-in ceremony is what we hear. When asked about whether he will accept Rajya Sabha role, well, the Karnataka Chief Minister Siddaramaiah said that he will speak tomorrow about it. As per sources, DKS is really reported to be staying put in Delhi and will go to Bengaluru tomorrow. Furthermore, a breakfast meeting between DKS and Sidhu is scheduled for tomorrow. Following this particular meeting, also sources suggest that Sidhu is slated to resign soon. All right, so that is a lot of politics happening in the state of Karnataka. With that, completely out of time on this edition of Profit 360. But do keep it with NDTV Profit. Thank you so much.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. I'm Sharad Dubey and you are watching one of the best shows in the town, and we get you interesting companies, their stories and the outlook ahead. And today also I've got a very interesting company for you, the company in focus. I'll give you those details, but try to use your mind a bit. I'm going to give you a little bit of hints. The first hint, it's a healthcare tech company. There are 4 or 5 of them in the listed space. So let me make it easier for you. They recently acquired Arai and TrueBridge. These are some important AI related acquisitions which have been happening in this space. Of course, it's not a recent listing, but I would say that from December 19, 2024, the listing has been there. And if you look at the numbers from the March lows itself, there has been a good up move coming in. That's almost 29% of up move going ahead. But which stock is in focus? Try to guess. And the stock in focus is IKS, Inventurous Knowledge Solutions. This is the company we are talking about. But why are we talking about this company? That's the first question to be asked. First reason is definitely going to be on the acquisitions. इसमें synergies क्या बनती है? 2 बड़े acquisitions company ने किए हैं. One is ARIA, another is TrueBridge. And of course we'll try to understand, because last time also the management did speak with NDTV Profit, but we'll try to understand what's the integration looking like for this, what's the addressable market for this outsource segment. That's what also something which we'll be focusing on. And also if you look at it, the margin and revenue growth outlook going ahead. Remember, fourth quarter was a seasonally weak quarter as well. But question arises is how big this market is and what benefit comes in. Remember, इनका जो सबसे ज़्यादा धंधा है US से आता है, हेल्थ केयर सर्विसेज को ये प्रोवाइड करते हैं, एनेबलिंग प्लेटफॉर्म जो है उसे कहा जाता है. But let's see other question also, which is important, is AI, agentic AI, how much solutions comes in and what are the benefits from this segment. So we'll try to understand the business model, the growth perspective and also the market share. Market कितना grow कर रहा है और company क्या उससे ज़्यादा grow कर रहा है, अगर कर रहा है तो क्या market share gain है. And to put everything in perspective, we'll be joined in by Nitya Balasubramaniam. She is the whole-time director and the group CFO at IKS. But IKS hai kya? What is this company all about? I'm going to give you all those details. No matter how technical a company is in KYC, we simplify it for you. It's a platform as a service, PaaS company. Interesting. Let's understand more about this. And it caters to the US healthcare provider segment. Also focusing on outsourcing routine course of physicians. तो physicians के धंधे को digitalize कर लेते हैं. ये है कंपनी का जो है overall मोटा मोटी definition है. Offerings include of course admin offerings and clinical offerings. Patient के जो पूरी journey होती है, that's what is covered digitally, to put that in perspective, and the company is behind it. 700 healthcare organizations. That's one of the important reasons. Let's also talk about the employees. This is the employees number you're looking at, 13,331 of them. And then let's move on and see other key parameters. 90% plus revenue actually comes in from the repeat customers. So that is an important point to talk about. Also, let's look at the other key reasons to be focused. They have almost 450 plus enterprise level customers. And going ahead, if you look at it, देयर इज अ सीजनल वीकनेस। आप देख रहे हो फोर्थ क्वार्टर में जहाँ पे इम्पैक्ट आया है वो देखिए, दिस इज कमिंग बिकॉज ऑफ द सीजनल वीकनेस एंड ऑफ कोर्स द विंटर इम्पैक्ट। हेड काउंट लार्जली up 5%, declined by 19% on a sequential basis. Operational numbers ठीक ठाक आए हैं। टेक एम्प्लॉय कोहॉर्ट दैट इज एक्चुअली ग्रोइंग गोइंग अहेड, और जिस तरह AI आ रहा है ये नंबर शायद और ज़्यादा बढ़ सकता है। बट इंपॉर्टेंट थिंग, द फर्स्ट एक्विजिशन, RI Solutions acquisition, this is what we talk about, and over here we see their ontology segment is doing well. Roughly इस पूरे acquisition को $1.2 million ये upfront cash होगी। IP is your integrated property rights which you are seeing on the screen, and also there will be a discounted ESOPs for the 4 years to align with the long-term interest. Apart from this, there is an $8 to $12 million of a build cost as well. Seems technical, लेकिन ये सिर्फ एक डील है, इसका फायदा क्या होगा वो आगे जाके बताएंगे। एंड दिस इज द सेकंड एक्विजिशन आई लाइक टू टॉक अबाउट। इट वाज डन इन द मंथ ऑफ अप्रैल, अ $565 million acquisition from TrueBridge. This is also a very important one. Why? Because इसमें सिस्टम ऑफ रिकॉर्ड पे फोकस रहेगा। पहले वाले AI पे था, दूसरा वाला रिकॉर्ड पे था। And of course, this will be looking at for the rural and the community segment. The combined pro forma adjusted EBITDA margin as per the calculations comes at 26%. So there's a very massive acquisition by the company for this. US healthcare enablers, of course, looking at the industry, that's expected to grow at 12%. That's what the management commentary has been coming. और देखा जाए तो $5 trillion का ये पूरा US healthcare expenditure is there. So such a big market, and there is everything for a lot of Indian players, not just for this company as well. The TAM is nothing but total addressable market. That's around $260 billion. And if you look at the outsourced market, that's roughly $34 billion. So there's a lot of coverage left for companies like IKS and its peers. And this is the numbers looking at the growth over the next, we could say from 2023 to 2028. This amount, of course, comes to 8% or 12%. So this is how the industry looks. But what are the key triggers ahead? और इसमें क्या मैंने पॉजिटिव भी रख लिया है, मैंने नेगेटिव्स भी रख लिया है। सबसे पहले, it's cautious but optimistic. That is what I'm going to say about this company. The debt and the return ratios, they are improving, so that is something to look forward to. But yes, it's not fully debt free yet. Integration risk is there of these large acquisitions. इसमें समय लगता है, and that is why clear timeline is very important when you're analyzing this. But the valuation, that seems expensive when it's compared to peers. So we will be looking at those numbers as well. Analysts are bullish, especially on the the synergistic acquisitions to play out. So yes, Street is hopeful for this counter, but क्या ये भाव में दिखेगा? That's the big question. So let's try to understand, and to put that in perspective, let's get in the KYC ratings to show you 8 ratings where we track a company in the KYC segment. This of course includes your income statement, balance sheet, cash flow, and I'll say the return ratios as well. बहुत important होते हैं. Street cred, shareholding, that also comes in, and valuations, a very interesting take. I have got around 4 peers where we'll judge whether this company is expensive or not, and of course the outlook. What are the numbers looking like, especially the TrueBridge acquisition? We'll try to understand that. But let's start with the income statement and let's see what's happening here. Largely the numbers are pretty strong, but the thing which you need to look at is this: 47 to 45% the growth which is coming in, that is showing a lot of strength. And ये पूरे long term basis पे जो CAGR आंकड़े आप निकालेंगे वहाँ पे देखेंगे कि अच्छी growth आ रही है. But let's talk about Q4 numbers. Q4 is seasonally a little bit of weaker quarter. So of course you look at the numbers, it's kind of slight miss as per the broking houses, but net the numbers do show a good strength. आते हैं margins पे क्या movement आई है, and largely it is back to where it belongs, that 32-33% plus margins, and currently it's at 35%. So you're seeing the margins, the way they have moved is pretty much decent, and they seem to come back. Remember, 2 बड़े acquisitions हुए तो margins में और return ratios में pressure आया था. So it's a strong thumbs up when it comes to the income statement. Balance sheet, I had mentioned you the debt is reducing. That was one of the positive points, and this is what we are talking about. 2 साल पहले IPO आया था, almost 1.5 साल पहले, और अब देखिए 275 crore rupees this borrowings is there, and it's a decent funded 192 crores cash balance is there, and the business model is such that यहाँ पे cash में उतनी तंगी नहीं होती है. They have US clients, they do not have government clients, so balance sheet is quite strong. So it's a strong thumbs up. So we spoke about income statement, we spoke about balance sheet. Let's talk about cash flows. And interestingly, the cash flow conversion has been strong. If you look at these numbers, they seem really pretty good. Almost 120% cash flow conversions coming in, and those benefits are coming in. और याद रखिए इंटीग्रेशन का जो benefits है, जो acquire किए, उसके benefits अभी तक आए नहीं है. तो it's expected to improve going ahead in FY27, FY28. Also, it's a strong up move from this segment. Let's talk about the return ratios and see what's happening here. Largely return ratios, a slight pressure is there because of the acquisitions, and that's largely known. But ऐसे business model में भी 30% से ज़्यादा का ROE मिल रहा है, तो यहाँ पे आपको strength देखने मिल रहा है. And look at that. This is the momentum coming in. So I would be giving this, the entire business model itself, a strong thumbs up. So we did 4 ratings. Let's understand the shareholding, and remember shareholding का history थोड़ा कम ही होगा. 2024 के एंड में कंपनी जो है लिस्ट हुई है. And if you look at it, the promoters have kept their stake around 64%, and it's almost same out there. But FIs and DIs have started lapping up, and this is a good sign. Post IPO also good follow-on buying is happening. And if you look at it, around from 5% has gone to 8%. From DIs also, it has almost jumped 50% to 6%. So this is a very good sign. So I'm going to give this a strong thumbs up as well. And this is how the picture actually looks right now. So it's quite even Stevens, and post IPO also institutional interest has been there. So that ticks mark on my analysis. So of course, shareholding is a strong positive as well. But let's talk about street cred. IPO के बाद क्या पैसा बना है, और if somebody has entered recently, have they made money? From March lows, everything went up, and of course the company also did well. So if you are a trader on this stock, you must have made 29% if you had come on the March lows segment. But if you are an investor post IPO, this stock has tested your patience. 1 year is just 5% returns coming in from this lifetime high levels, especially during its IPO time, where there was a definitely hype on the sector. That stock went up pretty high, but from these levels, it's still down 23%. And from the IPO price, 1.5 साल हो चुका है, it's around 24%. So it's a decent return if you're holding it right from the IPO. But after that, if you're an investor, the stock is testing your patience. So right now, let's give this a neutral rating from both the sides and keep it balanced. Now my concern comes in valuations. Is it the high priced IPO, or is there some other reason why these valuations are on the higher side? Compare IKS with their FY28 PE numbers. JM Financial के broking house के report से लिए हैं 20.5 times. This is the higher valuations coming in. But let's compare them with others. There is First Source, there is Sagility, there is Indegene. These are also the stocks, but there most of the averages is ranging between 13 to 16 times. And interestingly, other peers are also there if you'd like to focus on, and they themselves are trading on a lower side. So the average is around 15 to 16 in this industry. So definitely stock is trading at premium, and it is not cheap. So it's a thumbs down when it comes to IKS. Let's talk about the outlook, what's happening here. The TrueBridge integration, that remains a key monitorable. But integration इतना बड़ा है कि समय लग सकता है, delays हो सकते हैं. So that risk you need to keep it, and that's of course the execution risk as we call it. Also, let's looking at the operational parameters. They are expected to improve going ahead as well. आपके free cash flow yields में भी improvement आए, and there's a lot of synergies and cross-selling also because of these 2 acquisitions which we are discussing. The company is saying it's growing faster than the market. That means there is market share gains also. The commentary in the con call was strong. Also, let's look at the outlook. Apart from this is the AI-led initiatives, especially जो ARIA का acquisition हुआ है, वहाँ पे agentic layer company के पास already था, but अब जो है एक smart R&D और AI का angle भी आता है, and it comes on the same product stack if you are a technical viewer for this. So this is the entire outlook coming in, but take things with a pinch of salt. Execution risk for these large acquisitions is always there. The finance costing and how things move ahead, that is also something which we'll monitor. So right now, I'm going to give this a neutral rating. The stock has done well in most of the parameters which we have discussed. So let's do a revision. एक revision करते कि इसको कितना मिलना चाहिए KYC के ratings में. Largely, income statement, balance sheet, cash flow, return ratios, all of them have been top notch. I really like the shareholding also, where the DIs and FIs have shown interest in the company. Just the concern comes in is after its IPO, money hasn't been made if somebody has actually entered. So very minor returns have come in as per the expectations. Was the IPO expensive? That's the question. Valuations, that is where the expensiveness still is there if I compare it with the peer, with its peers. And outlook, two important acquisitions. Let's see what happens next. That's the big question. So overall ratings for this is 6 out of 8. It's largely one of the higher numbers at an average we give for a company in KYC. But to get more perspective in this, we'll be joined in by Nitya Balasubramaniam. She's the whole-time director and the group CFO for IKS as well. An interesting take. She's 16 years industry experience in Cipla, McKinsey, and also she is of course one of the you could say a larger equity analyst, also a very respected one at Bernstein as well, education coming in from IIM Bangalore. So it'll be pretty much interesting to have a chat with Nitya and try to understand the growth prospects of IKS. Now we are joined in by Nitya Balasubramaniam, whole-time director and group CFO at Inventurous Knowledge Solutions. Good afternoon, Nitya. It's always a pleasure to have you. And of course, the first question I would like to ask is, a lot of acquisitions are at play and a lot of numbers, it's mind-boggling and a lot of crunching is happening. Just I wanted to understand and simplify it for our viewers. First, the recent acquisition of ARIA, the rationale about it, and what are the key numbers about it? There's a lot of data thrown around. If you could just simplify it for us, and what does this mean for the company?
Thank you for having me, and happy to talk about the acquisitions. So our acquisition was more towards acquiring specific IP as well as the talent that came along with the company. What RI brings to the table is actually proprietary ontologies that the team has actually built. These ontologies are very simply knowledge graphs. And what these knowledge graphs are able to do is able to harmonize the data between EHR, the disease profile of the patient, the genomic profile of the patient. It's able to put it all together in a manner as to enable better clinical decision making. So that's the reason we're very excited about the RI acquisition. Of course, the two founders as well as the two chief scientists will be joining IKS and be contributing to our AI product development. And their technology and their skill set becomes even more important in the context of the other larger acquisition that we've announced, which is of TrueBridge, right? Remember, I said it's able to harmonize data from the EHR and multiple other sources. With the acquisition of TrueBridge, now we actually have a business where TrueBridge, 40% of TrueBridge business is actually selling EMR EHRs in the rural community health segment. So we now get access to the data behind the EHRs.
Right, Nitya, I try to understand the synergies are there, but it's just such a big size of the acquisition you have announced for TrueBridge. And of course, there are some critics, about how the execution plays out. Especially everybody wants to know is what is the timeline looking like, and if any integration, if it happens, by when it happens, and by when we can see that in your numbers also.
So again, TrueBridge is a transformative acquisition for IKS. You will appreciate that it's two very similar sized organizations coming together. We did about $364 million last year. If you look at 2025 numbers for TrueBridge, that's another $347 million. So two very substantial organizations coming together, and any such large transaction, I think there is going to be a lot of work that needs to happen to be able to integrate the two companies. Integrate the systems, the processes, the people, the culture, which is possibly the most important ones. Yeah. But when we think about how we think about value creation with the asset now in the hands of IKS, we've actually put out what we believe will be IKS's true north for the next few years. What we have communicated to a street is what we are aspiring towards in terms of EBITDA as well as net debt position. EBITDA, our last trailing 12 months was in the zip code of 1,000 crores. And we are saying by FY30, through the synergy generation and being able to accelerate the growth of the combined entity, we should be able to touch 3,000 crores in EBITDA in FY30. And in the same time frame, while we are starting by assuming a debt of $600 million, we hope to be able to pare that down to net debt levels that we enjoy today. So as of FY26, our net debt levels was about $26 million, and we hope to be able to pare that down to similar levels by FY30 through cash generation.
All right, so that is how you're going to maintain your debt equity ratios. And I was just checking the numbers also. There has been an improvement in your cash flows, operating parameters and KPI as well. But let's talk about something short term. We spoke about acquisitions and long term, but short term Q4 is a largely seasonally mild or a weaker quarter for you or your industry as a whole. Just wanted to understand for the next 2 quarters how things are looking like. New billings start coming in, new clients come in, and of course now AI agentic orders are also coming in. Or is that order flows actually at delayed right now because of so much changes happening? Just wanted to give us a feel about the first or the second quarter now.
Yeah, I think every quarter we actually talk to the street about new deal wins and new client wins that we have acquired. And you will see that the deals that we announced since Q1, Q2, Q3, and more recently Q4 as well, these deals will start to ramp up in the coming quarters. And when it comes to AI as well, I think we're very excited about the kind of products and automation levels that we have been able to deploy in our features. And that is also something that we continue talking to the street about on an ongoing basis. So more recently, we have launched a fully automated front-end platform. We have also launched a fully automated clinical documentation product. And there is definitely more and more to come with the kind of investments that we're making. So again, we don't normally talk about specific Q1 guidance or Q2 guidance. What we've always said is that we should be able to grow faster than the market given the differentiating features in our platform. And I think I will maintain that guidance.
So Nithya, let's just talk about market since you mentioned you will be going faster than the market. So by theoretical definition, you gain market share. So just give me 2 numbers, how fast the market is growing and what kind of growth you can expect. Maybe the market is 12%, so are we expecting 15 to 20% from you?
The market is growing at 12%. As I mentioned before, we should be able to grow faster. We really haven't put out a specific number out there. So there is also TrueBridge's the acquisition closure to look forward to in Q2. Of course, several regulatory approvals are now underway. Work is underway. And we're hoping that the closure happens in Q2. And I think once the integration happens, we will talk to you again about what the combined entity looks like and what will be our guidance for the combined entity.
Fair enough. So that gives a lot of clarity because, of course, a lot of investors are there. They have asked post IPO, larger acquisitions have come in, institutional interest is there. But definitely the clarity is something which the street still awaits, and hopefully in the matter of some months we'll be able to get it from you as well. But till then a little bit of uncertainty would be there, and maybe for large deals, it takes time. There might be an execution risk also. But let's talk about the addressable market. You have been bullish on your presentation. I was just seeing the numbers also on the outsourced service provider operations. Does new markets open up for you now, or are you looking at something new apart from that? Because I know that your acquisitions quota seems to be full because a lot of balance sheet pressure can't be taken. But I'm just trying to understand, if you have to do something new, what will you do?
So what TrueBridge brings to the table is their ability to expand the addressable market. IKS traditionally has focused on the ambulatory segment or the outpatient segment. Physician clinics have been our primary customer group. TrueBridge, on the other hand, is always focused on the rural and community health hospitals. So with this acquisition, this now provides us an entry into the rural and community health segment market, which we didn't address before, right? And also in terms of new products and new features that get added onto our platform, we did speak about how the RI acquisition actually could potentially create, again, new product suites for us. And I think the most important thing with TrueBridge's acquisition is now our ability to create this AI training corpus, which will draw from the data sets that's sitting in the EMR EHR of TrueBridge. This is, of course,
fair enough. Fair enough. Yeah.
Rich data for us to work.
Right, Nithya. Very nicely explained, and it's a very technical industry out of which the acquisitions are quite technical, but you have simplified it for our audience at KYC at NDTV Profit. Thank you very much, Nithya, and best of luck for the future. And hopefully we get the numbers which we want going ahead for IKS. It's always a pleasure to talk with you at NDTV Profit. So that's the management of IKS. 2 large acquisitions, but we are still awaiting important guidelines or deadlines or the integrations. So stay put, that this story continues, and keep watching KYC at NDTV Profit.
Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. on NDTV Profit, for your profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to...
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Watching Your Money Matters here at NDTV Profit. I am Mahima Vajrajani, and with me today is CA Abhishek Mehta, who's also a CFA, by the way, and he runs something called Investa Capital. So thank you so much, Abhishek, first of all, for joining us. And we are going to discuss a very interesting topic, viewers. We are going to talk about as to how you can optimize as saving on your taxes and how that can be done via a contract route. Now, this is the entire area or point of discussion that we're going to talk about, but we're also going to talk about the old regime versus the new regime and so much more. So it's going to be a very insightful conversation. I assure you on that. So with that, just beginning with the first question, बहुत basic question, Abhishek, with regards to the old versus new regime. I think still people are confused as to what to do, क्या करना चाहिए, what is the a cut-off rate जिसके बाद you should shift your regimes, and how should one go about it?
So I think from this year onwards, 95% of the people, it will be beneficial to go with the new regime only.
Yeah.
I think the biggest question you need to ask yourself is that, do you have an HRA? Because if you have an HRA, then only most of the times your old regime will make sense. Correct. Or else it is better to go with the new regime, because your deductions are very much limited now. You will get probably 1.5 lakh in ATC, 25,000 to 75,000 in ATD, 2 lakh in loss from house property. So more or less that comes to about 3.5 lakhs. If you have an HRA, if you're living on a rented premises, then only I think mostly it will make sense for people to go for the old regime, or just make it very simple, make your life simple and go with the new regime. You don't need to claim any deductions. Just pay the tax as per the slab rates and you are done. There are 2 or 3 things which you can still claim in the new regime. One is your 75,000 standard deduction. Your second is if you have a premises which you have put on rent and you're claiming interest on that. So you can set off that interest against that rent and make your, the income from house property zero. And the third thing is if your employer is contributing to the NPS, then that amount can also be claimed as a deduction. So these couple of things can still be claimed in the new regime. So the biggest question you have to ask yourself, if you are staying on rent, then probably go with the old regime. Just check your break-even point and decide.
Okay, that's the easiest answer that I've ever heard. So thank you so much for that, Abhishek. Now the other thing that's picking up, that's the main point of discussion, right, today, is contractual agreement.
Yes.
A lot of people today, and in fact I've been getting a lot of comments in our YouTube section as well, कि ये होता क्या, right? What is this contractual agreement? How should one go about it? When should one pick that? So first of all, I think it's important for them to understand as to what a contractual agreement is and how is it different from you being in an employment.
Right. So basically in employment, you sign an employment contract and you come under the labor laws.
Correct.
If you work as a freelancer for the company, it is more or less, if you're a contractual person with the company, there are certain benefits which you get as like in direct tax also and indirect tax also. One of the major benefits is that your TDS rate comes down to 10% as compared to what was there in the slab rate. Second is you can claim lot of your expenses while filing your taxation, because in salary, whatever your income is there, you have to pay the tax. But when you are in a contractual person working with the company, I would call it a contractual employee. The word employee is not the right word, but if I say it as a contractual employee, whatever expenses you are doing, you can claim all those expenses in your profit and loss account. So basically you have to prepare your balance sheet and P&L and books of accounts and file your income tax returns. And that can bring down your profits and bring down your taxation as compared to a salary. That is why a lot of people have started moving from an employment contract to a contractual employee kind of role, where they can save a lot of taxes because of the expenses which they can claim. One very good benefit when you are working probably as a management consultant for a company, there is something called as presumptive taxation. Earlier that section was called 44 ADA, now that section has been called in the new tax act section 58. What does this section say is, if I'm earning up to 75 lakhs, I can show 50% of my income as profit and file my income tax return. So for example, if I'm earning 24 lakhs, I have to show 12 lakh rupees as my profit. And under the new regime, section 87A rebate, I have to pay zero tax. Even if I'm earning 75 lakhs for assumption, I can still go for a presumptive taxation and show profit as 37.5.
Correct.
If my expenses are more, like for in my cases, my expenses are much more higher as compared to a normal person. I bought a car, I have laptop, my mobile, all these can be claimed as an expenses. My internet, if I'm wearing some clothes which are for my office, all those things can be claimed as an expense, and you can go below 50% also. It's not a rule that you have to show minimum 50%. You can definitely go below 50%. The only caveat is you will have to do an audit of your books of account.
Exactly.
There is one more very big benefit is in the indirect taxation. What happens is if you are earning more than 20 lakhs in this freelancing contract, you have to take a GST number and your company will give you GST over and above your income. Now, whatever expenses I am doing, suppose I bought a mobile, I have paid 18% GST, I can take credit of that. I have bought a laptop, I can take credit of that.
Correct.
So all these, your expenses of the businesses, which are for your business, you can claim the GST input as a credit and save some amount on that GST. So dual benefit, you have to look at direct tax benefit also, you have to look at indirect tax benefit also. I have seen in majority of the cases, this contractual employee works well in terms of if you are able to do your tax planning well.
Very interesting. I did not know about this indirect tax angle, so that's a plus point for me here. But I have follow-ups on this one, right?
Yes.
The first follow-up is that presumptive taxation, if you are taking that expenses, if you are deducting expenses, right, from, let's say it's a P&L, right, for a person, if you're taking deduction of that expenses, like you mentioned, audit is compulsory. But the same rules will apply, right?
Yes.
75 lakhs tak, you can take presumptive taxation, is that correct? But you'll have to take audit into perspective.
So there are two parts. Either you can go for presumptive taxation or you go for a normal taxation. Okay. If you are going for a normal taxation and showing profit below 50%, then you have to go for audit. If you are showing you are going above 50%, then you don't have to go for audit.
Right.
And in presumptive taxation, very simple. You don't need to prepare your books of account. Whatever your income is there, you show 50% as your profit and file your income tax return, and your life is sorted.
Sorted. Perfect. And for GST, just for our viewers' perspective, 20 lakhs when you cross, that's when you get your GST registration.
Yes. So if in a year, probably till the first 18, 19 lakhs, I can still skip GST.
Yes.
And then once I'm about to cross 20 lakhs, before that I have to take the GST number and start filing my GST returns. So yes, your compliance increases a bit as compared to employment, because things are very easy in employment. Here your compliance will increase, but the other benefit that you can do more of tax planning as compared to what you can do in your employment.
So then is there a checklist in place in terms of compliance as to what one should keep in mind if they're going through this contractual route and also taking audit into picture?
There are two major things. One is your GST returns has to be filed on time, and second is only at the end of the year you have to file your books of accounts if you are going for non-presumptive, and if you are going for presumptive, it's very easy. In fact, it's more easier than filing your return of salaried class, because you just have to show your income.
Correct.
50 lakhs was my income and 24 lakhs, 25 lakhs is my profit. So these are the two major compliances. There are certain disadvantages also of this as compared to your employment contract. One is probably you might not get your mediclaim. When you are in employment, you get some mediclaim benefits. You might get some term plan benefits. So all these, your gratuity. Now, gratuity was a negative point before the new labor laws came, but now the labor law says that even if you are a contractual employee, you are still eligible for gratuity in the new labor laws. So these are a couple of things when you are drafting your contract, you need to keep in mind that in my employment, maybe I was getting mediclaim, maybe I was getting term plan, maybe I was getting an accidental policy, maybe I'm getting some 21 days leave. All those things needs to be considered while drafting your contract. So you might need some help in the start once you are switching your role from an employment to a contractual person.
Got it. So I think it's important to consult your CA or whoever you're talking to in terms of getting help in terms of drafting this contract, because as Abhishek mentioned, right, it's important that if you're doing this just from a tax perspective, then there has to be clause that protect you in terms of your exit. Also in terms of how your employment security stands, and also from a perspective of leaves, because that is also very important, right, at the same time. With regards to ESOPs, how does that fare? So I believe that somebody who's on contract, especially when somebody was earlier on an employment contract but then shifts to on a contractual basis, how does that work? And secondly, then how does ESOP work there?
So you will not get ESOPs. What usually companies do who are hiring a lot of contractual employees, they give them sweat equity.
Okay.
So that's how people are managing, because ESOPs is only for the people who are on the employment side. So they are managing it through sweat equity, probably giving them on discount or on zero value, and that's how they are managing on the ESOP side. And see, in India, there are very less companies who give ESOPs. Probably if there are 20 lakh companies, there would be 5,000, 10,000 companies who would be giving ESOPs to their employees. So 99% of the companies are not giving ESOPs. So you need to plan those things, and probably as compared to ESOP, you can ask for sweat equity from the company.
Okay. The other aspect is with regards to insurance that you talked about, right?
Yes.
That the medical insurance benefits or term insurance benefits that generally an employee gets might not be available for a contractual employee. So how important is that aspect to kind of take into consideration before switching, if somebody wants to switch from an employment contract to contractual agreement?
That's a very important aspect, because obviously your mediclaim expense will then increase. Usually we always tell clients that even though you have an employment mediclaim, you still take your own, but still that is an expense. And I have not seen a lot of employees taking a mediclaim separately or a term plan separately when they are employed. So that will increase your expense probably by 25,000 to 50,000. And also, if you are taking a new mediclaim, your pre-existing diseases will not get covered. So ensure that once you are switching and you are probably even thinking of taking a mediclaim, whatever pre-existing diseases are there, you will not get covered for the cooling period of probably 24 months to 36 months of whatever your mediclaim company is giving. So keep that in mind, or probably ask your employer if they can accommodate the mediclaim in the contract and the term plan in the contract. A lot of times I have seen the companies, accommodating those requests.
Right.
See, it's easy for companies also, because they also feel little easy in terms of 10% TDS. They don't have to take the declaration, they don't have to do the submissions and all those things. And sometimes it's easy for firing also for the employer, because contractual employees are usually, they don't take it as a burden on them. So it is very good for an employer also. They make 11 months, 12 months contract, and they keep renewing those contracts till the time the requirement is there. And this norm is there in US and European countries a lot. Slowly and steadily it is coming to India now.
On that, I think firing part, Abhishek, because as we were talking about job security, right?
Yes.
Since we're doing it for tax purposes, at the same time, it's also important to keep in mind job security. So this is my opinion, that when you draft the contract, you should have a notice period in place, which is going to be beneficial to the employer, and the employer will go for it. But at the same time, you should also have a severance pay clause in case, and a notice period clause from their end as well.
Right.
If they decide to fire you, there has to be a notice period clause and a severance pay clause. So what should one keep in mind while keeping this into perspective?
So this would be called an exit clause basically, or when you want to end the contract, two people want to end the contract, it can be either of the party. So you have to detail it out, that how does things will work in case the employer, the person who is giving you the money, is terminating the contract, or probably you are terminating the contract. The only caveat is, if there is a fight in this, then you have to go through the Indian Contract Act, and you will have to go through the normal court channel if there is a disagreement in the contract. Whereas in labor laws, things are more simple, because there is a labor commissioner, you can go and there's not too many complaints with and the process is a little faster when you approach a labor court. So yes, you have to make your exit clause properly, but keep in mind that if there is any disagreement, you will have to go through the normal channel of the courts, and that might take certain amount of extra time as compared to your labor laws.
Fair, understood. With regards to gratuity that you mentioned, the rules are same,
Same.
for this also 5 years
5
plus
years.
if you're working,
Yes.
you will get gratuity.
Yes. So it's more than, I think probably 4 or 5 months only back now they have included this,
Yeah.
because there are a lot of companies like factories and all, they usually hire people on contract basis only, and they deduct 10% TDS. They don't want to go with the submission, declaration. Then there is PT, then there is employer contribution. One very important point is, if your employer is contributing to your PF, ensure, see, that is part of your CTC.
Correct.
So don't miss that. Lot of people think I'm getting 90,000 in hand, so I should make a contract of about 1 lakh. But you have to consider what was your employee's contribution to the PF, what was the employer's contribution to the PF, and add that up while making the contracts, money part.
That is very important. That one should definitely
The
keep in
employer
mind.
can act smartly and just delete that employer contribution, but that is part of your CTC.
Correct.
So you can probably put that on table, that was the cost to the company, so you have to accommodate that in the contract.
As is. And so for somebody who's adopting this contractual nature of employment, since they're not contributing to the EPF.
Yes.
If you can just give a perspective of what they can do in terms of making sure that their money is being saved and being invested.
So obviously then they have to do their more of retirement planning. PF is more towards retirement planning. You cannot
Correct.
redeem the money for
Correct.
a good couple of years. So you have to plan your retirement. See, why people move to a contractual is they get more in hand.
Correct.
There your PF was getting deducted, so you and plus the tax was more, so you were getting less in hand. Here your in hand increases. So make sure you plan your investments properly, probably SIP, or you can go for a PF also, Provident Fund. The way you are investing in the Employee Provident Fund, you can go for a PPF, Public Provident Fund, and start investing your money there, or probably do an SIP for a longer term and where you don't break it. So that can be done to make sure that you are doing enough for your retirement planning.
Okay, got it. The other aspect is, of course, we covered a lot of it, but any other, aspects in terms of legal compliance that one needs to keep in mind before going for this contractual employment, and especially when one is shifting from an employment contract to a contractual agreement?
So the length of the contract will be important, I guess, because if it's a 12-month contract, then there is a question on your job security, because every 12 months then you have to renew your contract. So probably you can make a contract of 4 years, 5 years, or a long, see, it has to have a definite period.
Correct.
It cannot be indefinite. Like in employment contracts are indefinite. Till the time the contract is not broken, it will keep working. But usually the contractual employees are on a definite period. So you can have a probably 36 months, 5 years, 10 years contract. That is very important, and every point of the contract has to be gone through properly. See, in employment, usually you get your money by 7th. That is the labor law also. Here, there might be certain delay also while receiving payments, because that will depend on what your contract says. You have to first submit your invoice.
Correct.
Then the money will be released, probably 7 days, 20 days.
Correct.
GST might be released once your GST return is filed. So certain aspects will get complicated, but you have to wait how much you are saving as compared to how much time you are spending on all these. And it's not always that what you are getting in hand. You have to always consider the other perks, what you were getting in your employment, like your gratuity, term plan, mediclaim, all those things. Even for women, like maternity leave is there, compulsory as per the employment agreement, whether that is being accommodative in the contract or not. So all those aspects has to be seen, and then only you jump into this. It's not that because 10 people are running behind that, you also jump into it.
Correct. So I think all of those terms are very important to be kind of incorporated in the contract that you're doing. Because you mentioned a long-term contract, right? Let's say if somebody is doing a 4 to 5 years contract, how does the increment then change? Does that clause also have to be in the contract? How does that work?
So maybe there will be a certain, that has to be
Clause.
vague, that this much bonus will be given to you, or there will be incentives, or there will be some commission which will be paid to you. But in employment contract also, most of the time it's vague.
Correct.
Okay, there is a certain percentage, 5% to 20%.
Correct.
So here also you can make those clauses applicable. But again, if there is a disagreement, then there is a long route as compared to what you have it in employment contract. So you have to bear a lot of things in mind while going to this route, and your compliance increases. Every month GST, I've seen people struggling with those things on filing GST every month, then claiming the GST amount from the government. And a lot of time people think once the GST money comes into the bank account, they feel the pain of giving it back to the government. So it's not your money, you should know, it's government's money. You can claim the input credit of whatever expenses you are doing, but end of the day, that's government money and you have to pay it by 28th of the month.
You know, that brings me to the point of savings that we were talking about, right? Say in terms of retirement planning. I think it's also very important that if you're doing this, you should have 2 bank accounts, and whenever your monthly income gets credited, you shift a certain percentage of your amount to the other bank account, which just does your savings.
Yes.
You make sure that there is no expenses done from that, so that will inculcate a habit of saving for you, and then the benefit of EPF is kind of available to you as well, so you can do that, do it via this particular method. Abhishek, I had this question in mind. Does this particular nature of contract has anything to do with age? Do you think more youngsters should adopt it? Or it just depends on the amount that you're making?
So it's more or less amount. See, if I'm earning 10 lakh rupees salary, then it's stupid to go for contractual, because as it is, I'm not getting any taxed. 10 lakh and up to 12 lakhs, it's tax free. So it's more with the amount of what you're earning. Because if you're earning supposedly 1 crore, 2 crores as a professional income, so, and whether you have those expenses in place, to claim the deductions. So that is what makes it more sense. But yes, I'm seeing more of matured people are taking this because they are more mature to, take care of the compliances. They are well aware of, what expenses can be claimed, what cannot be claimed. So I have personally seen this with more matured or more informed people are taking this route as compared to the newer generation, because they are still not aware of the lot of aspects on the tax system.
Got it. Okay. Is there a particular